Morning. Thank you, Mangesh, for your kind words of introduction. Thankful to the committee for having given me an opportunity to once again get to benefit. Such that has to be done so as to with reference to we are not going to look at perspective of the builder developer. Heading is yes is the also in respect payments. You will have society as a party, but also as a party, and you will have a society is the owner. Any other person is the owner of land. And the difference is this, that in case of a society, before entering into a DA, is the owner of land, and even post redevelopment, the society will continue to since there is no transfer as such of land or building. There is admission of sold by the builder. Those people in turn are admitted as members of the society. So that's DA, where society is a party. Let's talk of a DA where society is not a mill redevelopment happening, closing and real estate which it has. In that case, right now, ultimately the land will stand conveyed to an organization by the builder, maybe sharing development. Then he may choose other types of simple. I give you development rights and you give me a monitor. Second could be the sharing development agreement. The sharing development sharing to an agreement with the developer. I tell you, weeks maximum. Yeah, you retain 60% of the area. In addition to this 40%, I may like the commercial. Be happy with 30% of the for the rest 30%, which is to be my share, I may ask for a would be a revenue sharing agreement. Now, under a revenue sharing agreement, what happens is the same development agreement. Difference is revenue sharing agreement, no area allocated to the that is going to sell every foot of it, what is being constructed, and whatever is the top line shared between the landowner and the price is that what is the taxation or the topic service capital just that the gain arising development rights will be charged under capital. Let's understand development. Yes, sharing, revenue sharing will follow automatically. Now, what am I getting? Area plus some money. Say area. What is the value of that area? Yeah, what is the value of that area? Is the developer has incurred. Because the land is already mine. So there's no question of saying that the price of the flat, when I receive 40% of the area, fair market value of 40% of the area constitutes full value of consideration. What's the full value of consideration of a flat comprises of construction cost plus profit margin. The land was no reason why I must your consideration of the flat. Therefore, commercials are that the land you what is going out is 60% of the development potential. What is coming is the percent of area to which clear on this. Where does the development where does development potential come from? Sorry, from the land. Does it really come from land or does it really come from somewhere else? It comes because of ownership. There is anywhere from Bandra, FSI is 1, which means on a construct purchased land and I constructed the building, obviously I would have utilized the full development potential. Normally, right? I would have used the development potential to its maximum. So today, when I ask a builder to come and develop, is used. Where is he going to give me extra area from? Why will I enter into a development agreement? Only because your flat, I do not have either the money or the wherewithal to do all that. The builder developer has the money to put up construction, the requisite wherewithal, he has the talent, the skill, etc. But he does not have. So we enter into agreement, which we categorize it or we nomenclate it as a development agreement. What has happened is, with such of time, development potential because the regulations governing the development have from time to time. It is for the first time in 1991, ER was introduced. Now, what is this concept of TDR? If you have a served or a school or for a playground or for a hospital, etc., the government plot of land does not have money to pay you because that's your land. Away that land, so it needs playground or for a social purpose. The government said, "You give me the land free, and I will give you a certificate called what is DRC? It's a development right. So if you have to me, which will entitle you to consume FSI equivalent of 10,000 square feet a plot somewhere else. So you as a landowner whose land was reserved, go to BMC, give the land, get that certificate. Now what do you do with that certificate? You can go and sell that certificate to somebody who is able to utilize that certificate. He will pay you money for that. Your money. You got your money. Without money in that sense. So they said, okay, if you have a DRC, you go and sell it to somebody. Let me say, I am the landowner with 10,000 plot area. Can I buy 50,000 square feet ka TDR and construct 60,000 on my plot? There is a limit. What is the limit? The limit is 1:1. Therefore, if my plot FSI is 10,000, by using TDR, I can now construct 20,000. I have to buy FSI from you, who are you, the holder of TDR certificate. I'll pay you money. I'll buy that certificate from you. And now, on instead of 10,000, my plot is called as a receiving plot. This maximum cap of 10,000, I will refer to as a right to load TDR. I will refer to as a right to load TDR. So I have 10,000 ka base, right to load 10. Where did this right came from? Into DC regulations. So right is a no cost asset. This right asset for which cost cannot be envisaged. Therefore, if I am transferring this right, going by the ratio of the Supreme Court decision, Shetty, etc., I'll say your computation mechanism fails. Right? Do I have an for this? Yes, you have a Bombay High Court in Sambhajinagar against which SLP is dismissed. That the transfer of this right to load TDR is an asset for which no cost can be envisaged, and therefore any receipt therefrom will not be chargeable to capital gains. It is a capital receipt because cannot be acquired by paying a cost. Then came the further amended DC regulations, and now they have brought in a concept of fungible FSI. Now, what is fungible FSI? They say that pay us premium and you construct 35% premium more. So 10,000 became 20. Now 20,000 is further increasing by 35%. which means what? Now construct 27,000 on that very same plot of land. 1,027 is attracting building. Now he can, instead of 10,000, give you 12,000, give you some money, still make money. That is where the charm is. Now this fungible FSI is also because of the amendment in regulations. Then came 2018. Then they said, we are introducing a new concept, which is called premium FSI. So you pay a premium and you acquire FSI from. What plot? Fungible FSI, we also have a 35% used also with a reference to TDR, 35% calculation that you get a as far as I'm concerned, what is the position? Now at this stage, let me clarify that there is an insertion in the statute of section 45 5A. 5A has been introduced from AY 1819. Go through the explanatory memo. It has been introduced to eliminate difficulties. Whose difficulties? They are saying landowners' difficulties. Right? What is the difficulty? They say that what happens is that the legislature's understanding is that in a development, what happens, but that is what the explanatory memo says. That is what one line of decisions took the position. EMA execute the development agreement. I sign a development agreement. I register it. If it gets taxed that good, where is the money to pay? The difficulty. So for litigation, I kept saying there is transfer, I do not know consideration, so on and so legislature intervened. Effective assessment year 1819, they say that we will have a special provision. However, special provision is only usuals and you are recognizing there is a difficulty. Well, I mean, the difficulty is same, but they say, no. In our wisdom, we want to resolve the difficulty only as far as are concerned. Is a development agreement. To past sections where assessments are pending, or will it apply going forward? Say it will apply. Agreements in 417, which is after coming in force of the, or cases where transfer is happening on or after 1470. I may have got into a DA in 2014-15, but may not have happened for whatever reasons. We have several decisions saying when transfer happened. When I'm filing my return for AY 1920, can I take up a contention that though the agreement was entered into in 2015, but is happening insertion of 45. Therefore, I have a right, the word, right? 5A. Yes. However, it appears, though direct question has not arisen, there are indications in various judicial precedents that 45A will apply agreements entered into on or after one I will apply to earlier transactions as well, then possibly there Supreme Court in the case of Kitchen Gulati, court has a that has gone is a contract for services. Now, if it is a contract for a question of against because there is no transfer at all. It's only a contract of services. The decision in the we are dealing with question is when does for capital gains to become chargeable? What is it that need a transfer? Should be consideration. If I gift it to you, there's no question of capital gains. There should be consideration and there should be profits and gains arising. So the question is development put to an example, get the premium effect. Into an agreement with the demolish my existing building, give me 12,000, me some monetary compensation, 27, 50. When have I transferred to the builder developer? Sorry, I have transferred development. Very clear that the subject matter of transfer is development right. Sir, is it development right with the developer and mill, like mill land, right? Then development potential cases do I have any? You have by tribunal where the tribunal said yes on sale of development rights are assets. So you have a direct decision from the jurisdictional bench of the tribunal. Now what happened? Assessing officers, they had income from other sources. What is their logic? Their logic is simple. Sir, आपकी बैलेंस लैंड था, आज भी लैंड है. अगर आप बोलते हो लैंड बेचा, तो लैंड जाना चाहिए था बैलेंस शीट. Understand? It will go away when I enter into a conveyance, when I receive my area, and at that point in time, I will eliminate land from my balance sheet. Otherwise, I continue to be the legal owner of the land, and there is no reason why land should stand eliminated from my balance sheet or its value should go down merely because I have entered into a development agreement. Now, made a mention of capital TDR. Is TDR a capital asset? The answer is obviously yes. If the party for receiving DRC was a capital asset, the consideration, which is the DRC certificate or the TDR, that also will be a capital asset. That then arises is said development right is a capital asset. We said TDR is a capital asset. Now I'm saying that that's which I will get. They capital assets or they become a stock interest. Owner who was having a bungalow of 10,000. Bidder is come. He has constructed a building there and he has given me 2,000. Now he has given me 12,000 in my example. So those six flats say 2 flats. Okay. The answer is still capital gains. My left and I got different issue. There could be a controversy as to what is the holding period of these flats to qualify as a long-term capital asset. You have a Kolkata tribunal decision to say that the holding period of these flats you're going to get commences from the date of DA. I do not subscribe to that view, though a favorable view. The view, according to me, is only when the flats come into existence does the holding period start. Because what are you transferring? You are transferring a flat. When did flat come into existence? If the flat came into existence in year 26, in respect of a DA entered into in 22, how can I say that I was holding a flat since 2022? Nevertheless, you have a decision. So it need be, I mean, in certain cases, if you are stuck, you will always make use of that judicial precedent. Okay. Now, the right to load TDR is a capital asset. Once again, Mumbai Tribunal in Chetna Trivedi's case. Okay. Now, this is interesting. Here was a case of a builder who purchased land, which was in, and he knew that it could find it as stock in trade. Sold this land through a DA. The question arose on applicability of 50C. This was a year where 50C was in operation, but 43 CTA was not applicable. Consideration was lower than the stamp duty value. The AO wanted to apply 50C. So he said this land is nothing but your capital asset, called it stock in trade. The matter is said that if had a land of encumbrances and of the fact that development is not feasible, such land cannot be stock in trade. Again, but it is academic because today, if not, you have 43. Now the question arises, what is the period of holding? Because capital gains will be either long-term or will be. So the question is said, what are we transferring? Development potential. When did I get this development potential? Is this short-term or is this long? Period of holding for a development potential will be with reference to the date on which such right came into existence. For example, go back to my example of 10,000 feet plot FSI. In 91, DCR got amended and I got a right to load TDR. So 10 ka 20 kab hua? 91. Then in 2012, I got a right to load fungible FSI of 35%. So 20 became 27 in 2012. So if I am entering into a DA with reference to 27,000, I have to compute my holding period with reference to the dates of amendment, which to an agreement in 2013. वहाँ fungible FSI be short. Low TDR will be about made a mention about BC Sri. Or transactions 2023, I don't have to worry about anything. Whatever the office says, I will ultimately, where SLP has been dismissed, look at BC Srinivasa Shetty, what tax are you talking? Correct? Or is it a half correct statement or it's a wrong statement? I believe this is a half correct statement. Why do I say half correct statement? It is a no cost asset if I got that asset or I was holding the land. See, when I purchased land, price which I paid to the seller of the land will be inclusive of the price paid for right to load TDR, because by that time that law was there. But for all lands acquired prior to 1990, when I paid the price to the landowner and I became owner of the land, that right was not there. Nobody could have dreamt that this right will come, government will amend the law or the regulations, and therefore I will be conferred with this additional benefit. And therefore, for lands acquired pre-91, the right to load TDR and fungible FSI will be no cost assets up to 2023. What is the significance of 2023? Well, post 2023, you have an amendment, effective assessment year 24-25, to tell you that any asset or any right which is a no cost right, call it, the right, the value or the cost will be deemed to be nil. Therefore, the entire consideration is now going to be chargeable to tax, at least for transfers happening post 2020. Get the definition clauses. Enter into DA, say the answer. Yes, somebody may say no. I will say legally no. Because exchange presupposes existence of both. In case of a DA, development rights exist, but what you are giving me, I will not call it extinguishment. Development right there. Having entered to a registered agreement with you for development, I cannot go and sell the development right to somebody else. And wait before the Supreme Court in the case of Sanjeev Lal. Involving possession in part performance of the contract has virtually become redundant to the decisions court in Balbir Singh Maini's case, read with Sesha Saisti. So we'll deal with those decisions. So after the pronouncements of the Supreme Court in Balbir Singh Maini and virtually become redundant in that. What is 6? Any which has the effect of transfer of the tribunals now. Because they cannot tax me under 247.5, Visakhapatnam Tribunal and some other benches of the tribunal have now started invoking 247.6, which also to my mind is incorrect for the reason that Sesha Sai Steel and Balbir Singh Maini have dealt with 247.6 also. They have said that enabling the enjoyment. So first, there has to be a transfer which has to enable enjoyment. It may not be a de jure transfer. Now this explanation produced. Produced type of situations, but the language is so sweeping. Possibly the removal of doubts is clarified. Posing of party. why possibly you're 247 was this exists by tribunal in Bharat by Patel, where consideration is sale and exchange. I mean, decided that also have a tribunal where the tribunal says that to say that there is an exchange, both the properties which are subject matter of exchange going controversy, we can go on for sessions together and still decide able to come to correct year of same time it is more because my time one is even in the year of transfer post 45(5)(a), which eliminates this difficulty. Now, what could be the options of year of transfer? The options could be year in which DA, the year in which power of attorney is granted, approved. Because if plans are not approved, what do I do with your DA and what do I do with your power of attorney? The year in which possession is given to the developer. Next, the year in which all the ingredients of 53A are satisfied. Your possession. Are you willing to perform your part of the contract? The TDR loaded. So there is a transfer, right? And every SSE will want year in which voting each of the propositions as straight. First time, their decision explained that in an area when I go back to my I'm getting 40% of the constructed area and land says 6 to have been, but this such time as say very rarely will it so happen will hand over the title of the same way different language had been mentioned. Yes, there the way court put it, I mean, one would say, okay, how do you arrive at this conclusion? Court said, how can a person pay the capital gain if he has not received? Sell my house to you, agreeing with you that you, being a good friend, will pay me money after 3. Maybe you are paying. I the title of the flat to you. Don't pay capital gains tax till you get your money. The obvious answer is no, because 45(1) is in that sense. It says pay tax in the following all the by tribunal, where the tribunal says until the project is complete and the DA, it said that SSC has received consideration towards transfer. I may not have received consideration. The question is not whether I have received. You are wrongly goes in your favor. Assuming the next component, full value of consideration. Holding value of consideration. What is full value of consideration? I mentioned in the beginning that the cost of construction, my portion which I will get is full value of consideration for giving up 60% of the land. Percent land will go out, and what will come is I will be entitled is where the ITO tax deposit also of construction. So you can't do this. Get the deposit ultimately is going to repay. Therefore, taxing on the tribunal again said the same thing. It said, here the question was, see, where will I get this from? Who will give me? Developer whose bogus purchase record tax. He debited the expense of project X to my project. My project cost goes up, right? Because he has project to another. So is no. If at all you want to do this, see, the correct thing would be ascertain fair market value of the cost. I would have got this 40% area constructed from Larsen and Toubro, Godrej Properties, Pyramids, etc. What would they charge? They would charge me 7,000 rupees. So that basis. Number two, negotiation stage. There is some correspondence, etc. That what the parties understood to be the considerations, then that. Third option, if at all you are in difficulty and you cannot come to this conclusion, then go to 50D. Say that if you cannot, firstly to my mind, 50D does not apply in this situation because you also have a ready reckoner value of the construction cost. Your ready reckoner today of 3,600 or 4,000 rupees, something like that. So pick up that. Generally, the AO goes by the developer. He will have to give me an opportunity of cross-examining the builder developer. Because the builder would have included in his cost the advertising cost, simply marketing cost. It has got nothing to do with my cost of construction. That is to market his project. He may have borrowed money. He may have capitalized interest. So if you have a builder who is borrowing versus a builder who is on own funds, the cost is going to be different. So are you going to tell me that my taxation will change depending upon the mode of funding of the builder? Cannot happen. Cannot happen. Therefore, the AO, if he wants to travel to the books of that builder developer, will have to provide me an option. Tell me your issues, and then he will have to make suitable adjustments. Of course, he may not blindly the data and logistics was confronted with a situation of the type I mentioned. That said, no, you can't just go on ad hoc figures. The Karnataka High Court, for a year where 50D was not even on the statute, invoked the provisions of 50D. Now, firstly, 50D does not apply to such things. Secondly, 50D was not even applicable for the assessment year with which Karnataka High Court was dealing with in CPC logistics. Nevertheless, Karnataka High Court No doubt, no provision was available where consideration received by accruing is not ascertainable. Throw some light on the subject. Now, this sentence could help you in several other places. I will like to use this sentence in the context of 45.5. I will now say that so what if 45.5 was not there on the statute? Throwing light on the subject. Therefore, please apply the ratio of Karnataka High Court in C6. This not mean rights in land also. Just of the fact a larger asset will always include a smaller asset, but if position was correct, there was no reason for make a distinction right in land, building, and right in building. So the question is, the bidding of rights in land with respect to land without any development rights. Therefore, the question is, will 50C apply? Several times when you consider a society redevelopment. Now, there, but not all. And there could be more propositions. Tribunal is Tejinder Singh to say transfer of leasehold rights do not attract 50s. We have Mumbai Tribunal in leasehold rights do not attract. Kishori Sharad Gaitonde to say tenancy rights do not attract. Several other tribunal decisions. Directly in the context of development rights, you have Mumbai Tribunal, Bodas, second is trading, Shakti Insulated, and third is Ronak Mark. Directly on the point that 50C. However, you also have 4 decisions where tribunal has taken a view that 50C applies. And out of these 4 cases, namely Chiranjeev Lal Khanna, D'Souza and case of Chiranjeev, SSC has preferred an Bombay High Court there, by deciding the case of Chiranjeev Lal Khanna, holds that 50C applies. The reason which doesn't appeal to me at all holds that 50C will apply to transfer of rights in land. What's the reason Rajasthan High Court says? Rajasthan High Court says if we take a view that 50C will not apply to transfer of rights in land or building, most of the cases will get out. Now, most of the cases may get out. If the language does not capture most of the cases, or the legislature, the law, so as to make sure that most of the cases do not get out of the provision, which is enacted. Merely because based on the language, most of the cases are getting out, I cannot interpret a provision to say that no, the provision applies. Anyway, that's Rajasthan High Court. It's a High Court, we have to respect it. You have Karnataka High Court, quite opposite. It says from the clear, plain, and unambiguous language employed in 50, It is evident that the same does not apply to case of rights in land. Now, therefore, Rajasthan, you were very happy. Vegetable products, whichever is favorable, I will follow that. But High Court telling you 50C applies. The Nagpur bench, I think, of Bombay High Court in Vidarbha Veneer Industries says it was dealing with leasehold rights. It says capital asset or bidding or capital asset is defined. So go to the definition of 214. And when they go to definition of 214, they say it is property of any kind. So they substitute property of any held by an SSE being land. So they are saying capital held in any form, one of the forms of holding land is leasehold rights. Right? That's how Bombay High Court has. Red flag. And even independent of this, there was another red flag in Jain Siaki, which was a decision in the context of finance of 1980. Levied wealth tax on closely held companies. One of the items on which wealth tax was levied was land other than agricultural land. There was this company in Pune, did not pay wealth tax on that. The said pay wealth tax because you are owner of land. The SSE said, what land? I am a lessee of the land. This is leasehold rights. Therefore, this is not liable. Matter traveled to the Bombay High Court, and the Bombay High Court said land will include rights in land, and I will still be comfortable arguing that yes, Bombay will not apply to 50C for the reason that Finance Act of 1983 did not make a distinction between land and rights in land. Tax law at dozen places makes a distinction land, rights in land, building, rights in building, always included rights in land. Why did the legislature 10 places rights in land property? Right? So anyway, I mean, for other than Rajasthan vegetable products and say, I will go by Karnataka. Let's come to cost of acquisition. Now, what will be the cost of acquisition? Capital gains compute करना है ना? Full value of consideration मिला. The cost minus 2024 up to 22nd July 2024 indexation भी मिलेगा. उसके बाद indexation नहीं मिलेगा, right? Or it will be there subject to that proviso to 112, etc. Now the question is, the development potential which has come. You have no cost because we said this came into existence because of the amendment. Because of that, I was arguing that the gain itself is not chargeable. But if at all you come to a conclusion post 2023 that this is chargeable to so there are two ways of looking at it. Which is the 15,000 which I have transferred in respect of what? Therefore, I need cost of what I have transferred. Have I transferred? So 15,000. extra which came into existence because of the amendment 2023, I will definitely 2023, I will take opposite view. I will say that 10,000 of my land, 5,000. The advantage is that now the land cost duly indexed, I will get it as a deduction. Am I clear? Will change depending on whether the transfer is pre-23 amendment or post-23 amendment. Also, this will have to be merely my making a statement here, it does not happen. This will have to be supported by your document. Your agreement should somewhere state that it is the parties have agreed that it is this going to the builder developer. Okay. Now, this I told you up to about 23, 24. Okay, let's now come to 45.5. Now, this is 45.5A before. What does it say? It begins with notwithstanding anything in 45.5A. Notwithstanding 5A is non-obstate 40. By 5A, go by 45.5. What were the difficulties in 45? As I told you, 45.1, I mean 45.5A has been introduced to difficulties or to. What were the difficulties? To my mind, year of transfer. I was asked under 45 pay tax in the year of transfer. Legislature's understanding is that transfer happens year in which agreement is registered. Here I don't have money to pay tax. Therefore, there was a difficulty. There was litigation on the year of transfer. So they said, let us put an end. How are you putting it into it? They say, if you are an individual or an HUF who has entered into a specified agreement defined term. So if you are an individual or HUF who is owner of a capital asset being land or building, be owner, not one individual HUF. Condition number 2, owner of capital. Both. Number 3, you are transferring that under a specified agreement. So what are you transferring? You're transferring land or building, but under a specified agreement. Then what happens? Then they say, forget 45.1, pay tax in the year in which completion certificate is received. Completion certificate. Get a part of shifted from year of transfer to the year in which completion certificate is issued by the competent authority for either whole or part of the. Second, full value of consideration will be stamp duty, your share. Stamp duty, your share. Now the question, this is the difficulty. Are you taxing market value of the market value of product does not become my consideration. Whereas here, that is what he is telling me. May go by another interpretation that no, I have never transferred that 40%. So where is the question of my receiving? I have transferred 60%. In consideration of that, what has come in is construction cost. I will say there is a controversy on construction. Go by estimate? Should you go by reckoner value? You go by the builder's books? What should you do? So also was a difficulty. So consider stamp duty. I mean, the law will have to to this area. Even if I've received monetary consideration in year one, it will still be taxed in the year of completion. The year of now, however, there is the proviso, and the proviso says that look here, if you put your share in the project for completion, good, I will throw you out of it, and I will tax you in the year in have transferred your share. You have transferred your share, and all other provisions of law will apply. 45(5)(a) will not apply. Force me out of 45(5)(a). This proviso gets triggered when I transfer my share before completion certificate. Back to our 1,000 square feet plot, 7,000 to be constructed, 12,000, comprising of 6 flats of 2,000 each. Correct? I enter into a DA in 2022, 2020. Yeah, 2000. Share. The market is high. I feel it's time to capitalize to flat based, right? I enter into an agreement to sell 2 flats of mine. The question is, will the proviso apply and I will be thrown out, or you will say, no, this is not a transfer of your share. Your share is 6 flats. So only if you transfer all 6, you will be out. As long as you don't transfer all 6, you're not out. Therefore, the issue is the words his share in the proviso means entire share, or does it also include part? I will personally take a view, his share with entire share. Into an agreement to transfer 2 flats, you cannot ask me that you are thrown out of 45(5)(a). What is the reason? The reasons are 2 or 3. What is the purpose of this proviso? If this proviso was not there, then in 2022, I entered into DA. I will not pay tax. I'll say 45(5)(a) बोलता है, OC आएगा तब तक रुको. So wait. 2025, I transfer all my flats. Buddy, out of the project. Government asks me pay tax. I say what tax? You wait till the project gets complete. Right? Therefore, the purpose of the proviso is to capture. The purpose of the proviso is to capture that gain. Those cases where the landowner is walking out of the project, not where he is partly in the project. Reason number 2. If you assume I am wrong, then what happens? This proviso can become a very important planning tool. Year 4 or a few months before, so it's going to come, will transfer. You have thrown me out of 45(5)(a). Where are you going to tax me? The year, but in the year in which I transferred my share, which means एक flat जिस year में transfer किया उस year में you want to tax me, and you want to tax me not on the stamp duty value of all the 6 flats, but now you want to tax me by the other provisions, and by the other provisions we saw Hyderabad Tribunal, Delhi Tribunal, Bombay Tribunal, Bangalore Tribunal, everybody telling me construction cost is the full. Therefore, if at all your full value of consideration means stamp value of 6 flats gets defeated if you take a view that part of the share will result in the proviso being triggered, right? So this is as far as 45(5)(a). Agreement there is a registered agreement. Therefore, if you want to get out of 45(a), if your agreement is a person owning land or building. Now, come to opening part. Notwithstanding anything, the capital gain rises to an asset, individual or HUL. Per individual HUL. But when I come to specified agreement, any person. Therefore, if I am a company, if I am a AOP, if I am a partnership, by the section does not apply, but still qualifies as a with introduction. There was introduction of 194 IC, which requires the builder developer to deduct tax the rate of 10 consideration paid under an agreement referred to in 45(5). Under an agreement referred to in 45(5). So whatever monetary payments you get under a specified agreement qualify for tax deduction under 194 IC at the rate of 10%. Therefore, in 2022, when I enter into a DA, I am going to receive 10 crore of rupees. On this 10 crore of rupees, though received in 2022, tax will happen in 2026 when the OC comes. But there will deduct TDS of 1 crore of rupees in 2022 itself, which credit I will get according to 190. So, the person only agree to allow another developer for real estate project of a share in project. Therefore, I must get some area in that very same project. I must get area in that very same project. If the entire area is being received by me in some other project of that very same builder, then I can give some area in that very same project, some area in some other project, and some monetization also. Am I clear? That will qualify. So as long as there is some part of the area in that very same project, it will qualify as a specified agreement. Productive 10-15 minutes where I made a mention of revenue share agreement. In a revenue share agreement, under a revenue, get any area. Okay. Now stamp duty value. By retrospective, I told you that courts have said it is not retrospective. First happening on or after 1/4/17. Also, the question is, will 45(5) says year in which I is the part of whole of the completion. If year 2024 the builder gets part of, तो उसी में मेरे ख्याल 2 फ्लैट out of 6, 2 फ्लैट covered out of. Should I pay tax 2024 under 45(a) or should I not pay tax? See, the language is part of both. I cannot say I is out of question. Question is, though OCC or is received for 2 flats out of, I pay tax on, should I pay tax on sale price or stamp duty value of all the 6 flats or only of 2 flats? Right. The section is not, I would believe, during the intention, I would pay tax only in respect of 2 flats. Supposing in that part OC, मेरा एक भी फ्लैट नहीं आता, अरे फ्लैट बिल्डर के आ गए, then I will undoubtedly say I will not pay tax. What is your intention? Your intention is I must receive so that I have money to pay tax in the year in which OC arises. In fact, this is one more argument you can take for the proposition when I said that I will sell 2 flats, yet I will not be covered by the proviso. The reason is the date when OC comes, you want me to pay tax on the stamp value of 6 flats or construction cost. Where will the money come from? To raise money by selling the flat, where is the money going to come from to pay the taxes? Your entire objective, that difficulty should be resolved, gets cleared. Therefore, one more argument to hold that sale or transfer of part of the share will not invoke the proviso. Next question is, do I get 54F benefits with reference to capital gain arising on on gains chargeable under 45(5)(a)? Question is, the year of CC, right? If right at the beginning I knew वो 4 साल लगने वाला है, 54 requires that the new house, will I be able to satisfy the condition? The answer is no. Therefore, what is the way out? What is the way out? 2 or 3 things. Number 1, first fundamental is 45(5)(a) shifting the year of transfer, or is it only the year of chargeability? Right? Is 45(5)(a) shifting the year of transfer, or is it shifting only the year of chargeability? If you tell me, so 45(5)(a) shifting the year of transfer to the year of completion certificate, then no difficulty at all. Your completion certificate आया, that is the year of transfer, उसी year का कोई टेंशन नहीं. The difficulty will happen is not shifting year of transfer. कि ट्रांसफर के डेफिनेशन में तो कुछ चेंज नहीं किया. जो चेंज किया 5A में आके ये बोला कि forget 45(1). If supposing it was shifting the year of transfer, then 45(5)(a) was 1 anyway says pay tax in the year of transfer. If you are telling me year of transfer stands shifted, then where is the need of 45(5)(a) saying notwithstanding anything? Therefore, the next question comes, or rather, if I have to come 45 conversion amounts to transfer, but the tax in the year in which the transfer may be happening where the भरने का year of transfer. Go to the income. Tutorial is a tutorial on 40. They have given choice question says, what is the year of transfer? Year in which OC is visited. And you have a Hyderabad bench of a tribunal just relied on this public in a different context and said this is the publication of a department. These are the force of a circular. It is binding. I don't. Nevertheless, I mean, firstly, I don't agree with that. What is stated in the tutorial. Secondly, I don't agree that this tutorial becomes a binding. Has a binding. Will accept. Now, please. Say tomorrow. There on the website. Now, 4F is at stake. The answer is no. In the context of 45.2, there is a CBDT circular, which says that your 54 EC benefit will be given within a period of 6 months from the date in which stock in trade is sold. So I will say apply the rationale of that circular here also. The transfer may have happened. Except this view, you are making 54 and 54F redundant. You cannot suddenly express so stating, make provisions of 54 and 54F redundant as far as transfers. More so in a society redevelopment agreement, amongst other, also pays to the landowner paid by over there. While you will be out, you will be facing inconvenience. Your present furniture will become bad. You will have to redo it. There'll be a lot of hardships. You're shipping to another. So giving you the is could be the options. If full value of consideration which I receive for transfer. For transfer. do everything under that is that view. Capital extreme. So you yourself are saying this has got nothing to do with my transfer. Well, at capital. Fourth could be this is taxable. Paid is allowed as a small view. This amount goes to reduce cost of acquisition of the original asset. I don't know how you get that view, but that is also. Recap. Number one, capital risk. Number two, income from. Number three, full value of consideration. Right? Number four, income from other sources, but rent paid deduction. Right? Number five, the original asset. Or decisions tell you. Sure, penalty. But decisions after decision. Look, this is a by Mumbai Tribunal in Vishwanath. Of consideration, same logic as I told you, but for transfer, would you ever get it? The answer is no. So what makes you say this is on a different footing? But this is favorite of ITOs. Some Jatinder Madan, they have given a deduction also, I think. Now, except it being because 57 says deduction will be allowed only incurred for the purpose of earning. Now, whether you incur or you don't incur, the bidder is going to give you. So, therefore, expenditure certainly cannot be allowed. But rightly or wrongly, there is a decision to give you. And then you have to say it goes Bangia is you taxed it as dividend. He says you have received it from the society, this dividend. Right? Said this is dividend. Like Kushal Bangia, right? Go to reduce the original asset. So ultimately it will be taxed as capital. The original asset का cost कम कर दिया, तो जिस दिन आप original जाओगे, it will the gain will be greater. Therefore, gain will get captured. But difference is between view 2 and view 4. View 4, it will get captured at some later. Greater than my cost. So what are you going to do in that case? Inherited a flat, other who had it in the year 1984, 86, maybe possibly for 5 lakh of rupees. Today, 3 years. Today, it's a cost has become. How are you going to track it? The year ultimate date, which may be even 5 years from today. How are you going to track it? Right? So this is about hardship compensation or rent for alternate accommodation. Now the next question is good in surplus the single judge non-tax bench of Bombay Court deciding landlord is paying rent to the tenant, pay gross. Yes, the tenant. This is the to the High Court. The High Court said, look here, there are 4 decisions of the tribunal say that this is a capital risk. The capital risk. Yes or this. I do not know whether it is correct to say that if the receipt is capital, there is no. Because whether it is capital or revenue, it is in your hands. Tax is to be deducted by the payer. Who am I to decide that the receipt or the payment which I am making to you is category? Said that they spent in the revenue receipt. It's a scenario certainly will not. Where DA is entered into by the society. This payment is where the member says, I am moving. If you are a bidder developer, will you relying on I will be penal. But because you are certainly not going to offer this up. You have already this is a capital. I will definitely be an assassin. Pay interest under 2011A. A1A. Therefore, the question is in law. In law. Is tax required to be deducted or is tax not required? Paid section says notwithstanding A, so it is non-obstante 194 IA. 194 IA is 1% TDS on transfer of immovable property. Any person responsible for paying to a resident, obviously non-resident, to a resident, a sum by way of consideration. For what? Under an agreement referred to in 45(5). Shall at the time of consideration which you are receiving, they under full 45. I read only taking me only to 45(5)(a), and therefore I will say society is not specified relevant in it. No, no. Historically says agreement between 45. Agreement refer to agreement. Consideration under a specified agreement or no? They may not be consideration for transfer of they or others a query in assessment of every single individual. Because the member, yes, you will raise a query. Boss, this is the TDS. Where is the income? You will have to now argue here Bombay High Court. Therefore, not liable. Somebody in some seminar asked me a case that unless you offer taxation, TDS credit will not be allowed. But if TDS will never give me get a credit, I will say, yes, he has deducted. Yes, on hardship allowance, therefore, yes, give me refund. Yes, in the first year itself. But this day, no TDS required. I have by tribunal years, the tribunal for IA, then so forget 194 IA. Now their reports. He should have deducted under for IC. Tribunal considers, they say no, this is not consideration under specified agreement. It does not require yes on consideration for transfer. Anyway, right? Following, like you have very recent decision of Mumbai Tribunal once again in Enrose Development, where they say that we are following Nathani Parekh. Nathani Parekh has held that no TDS, therefore no TDS. Right? So you have maybe two tribunals. makes a payment. Just through that. Yes or not could be a question mark. The answer to that will depend on how you says where any person receives immovable property without consideration or for inadequate consideration, then it gets captured. Says if property is received from a relative, property ऊपर cover हो गया. You have received flowing capital asset of the assessor, namely के अंदर immovable property के अंदर immovable है, वो नहीं है. The definition of property. The stamp duty value. Get captured the ground. That not talk. Movable property being land or building both. Land or building or both. So, saying that will cover within its scope even rights in or building or both, which is well proper. Beach, movable property trade. The price with High Court decision in the Bombay High Court said that if an earlier city and I when say that the amount on your cost of a stock in trade, difference between stamp duty is to be captured as 56,210 item, then you have not made a backup provision. Clearly not your intention. 56,210B is a successor to 56,207. 56,207 was introduced 56,207 on or inadequate consideration was introduced by the Fed. Then what happened is in two law, I don't want to tax that. Realize the difficulty that create a nuisance for a trade. Therefore, you issue an explanatory memorandum wherein you say that, look here, I do not intend items. Therefore, you have an explanatory memorandum bill which says that I don't want to tax items. And therefore, what? And therefore, I am introducing this definition of property, introducing the word capital. For reasons, I will not apply builder developer who our property as stock in trade. Also, one more reason. If you presume I am wrong, say, no, it's covered if it is stock in trade. Then the so 56,210B says that if I receive property from a relative, I will not pay tax. But itself, mobile property is a separate issue, right? That property means a capital, no doubt of that, right? Therefore, if I receive from my relative, but consideration, no tax. But if I receive property from my relative as trade, there will be tax. I mean, which court is going to accept this argument of yours? Therefore, the undoubted head as stock in. Last issue, chief guest is already here, so let me wind up. Last 2 minutes, 3 minutes. Will generally a development agreement confers an option on the extra area at a concession. Here, if you want extra area, I'll be happy to tell you price of 20 when the market value is question is the issue arose that when member of a society is receiving free of cost, so it's free of cost, at 50, I'm going to tax the extra area. The society to the builder developer. Otherwise, builder developer is not here to give me, the extra area free unless he has a commercial gain to make. The Bombay Tribunal in Anida Tata under the head area which you receive. Additional area which you choose to purchase from the builder price, which is a discounted pursuant to a DA which has been entered. The question is, for this extra area, year in which I receive the asset. The receipt will happen in the year of possession or year when the new building is ready. At that point, the stamp duty value to the year. When there is a time gap between the date of agreement fixing your value of consideration, the receipt of the date of agreement fixing value of a consideration, provided the first payment is yes, necessary that I when I give the or your DA is not relevant. What is relevant is exercise your option. DA would be entered DA date. 25,000 is more than the I exercise the option 2024, the stamp duty value has gone. Says I will honor it because I have made a commitment, I have honor it. Agreed. State are you going to consider stamp duty value 24 on it may have been fixed there. 22 does provide agreement requires two parties. Were you there in the scheme in 2022? Gray area. Possible that somebody will tell you, I will go by the stamp duty value. Take when you exercise your interest to will the point make the first payment paycheck in 2004 make any difference? Development agreement. That there was no backdating of the transaction. Courts are going to not insist.
Thank you very much for all the honor and thank you. It's always a pleasure to be here. I probably am the only chartered accountant in this room without a certificate of practice, so probably that's the thing. But I had the close to 50 years. Privilege at that point. Two of the teachers at that point well, and I remember my just happened against. So it was memory come back about when I saw you were speaking on a similar subject of thing today. I was like a flashback. I think real estate has world in those days, banks of first generation into business. So obviously there were handicaps of understanding what the entire world of business was. So it was quite a different story. From that, what has more than the growth of real estate is tremendous. And that is some more and more important. So whatever you're learning from Mr. Punjabi, so what is it that actually has made the real estate of the both at the funding level, both at the purchases level, and ultimately to be able to structure different things into different formats that is there. So all this has helped growth of real estate. However, you have to talk history. So the growth in terms of real estate is a faster number that you can 20% growth in real estate as a business. So the attendings that you are doing is going to be worth the while. But to focus on a subject which has actually the opportunities of growth in this area. The third major change which has really taken place is the regulatory format which has come up, which is the real estate regulatory. The, the Real Estate Regulatory Act is the principal change which took place a couple of years. The trigger mechanism was the problems which took place in the National Capital Region, where almost 100,000 apartments people failed to deliver. And that was a need. Regulatory mechanism. We are now scoring. And greater extent years of the weekend, those which happened prior to RERA, projects which are registered, and those to RERA will be again enthused to invest back the real estate as a business. And that's the biggest advantage that you have. Of course, the safety of people who put in own money, borrowed money, raised money for the purposes of doing that is an issue. Though there are problems managing what are the issues relating to regulation, and there is a complexity of it which is continuing to grow, and there is also unnecessary litigation by many of the people who are taking advantage of the issues that are taking place. On the whole, as an institution, the regulatory act, we have flagged up by circular various board rate at which regulatory. What is it that we need in order to grow the real estate business exponentially? And to what extent do we, as the Institute of Chartered Accountants, want to make modified law, GST law, RERA law, and the other laws? All these we need to work together. Why do we need together? Because we want to make it so that this does not hinder the growth of the industry as a whole. I want to tell you one thing. Why do I say here? Affordable housing. In Mumbai city, on redevelopment or any builder who does GST, close to 50% development. This on and you I went to PETA, one of the organizations of architects and engineers, and I got a certificate from them saying that this is a fact. And we present that to the housing ministry. They were shocked because in spite of the fact that various taxes are levied by the state governments, by the central government, direct indirect, in effect was that affordable housing cannot be done in the city of Mumbai in the private sector. You can do free housing for slums, you can do redevelopment and give it to them, but you can't clean land for the purpose of this. These are the issues that we as chartered different. Aspect of it is that crores of rupees under the PMAY 2 which is going to go for affordable housing and the cross subsidy work in Mumbai city because the prices and other things are much higher than the. On the other side, Devendra Fadnavis days ago, 20,000 crores only for affordable housing in the state of Maharashtra. Again, we cannot, we as developers can't. The state will land which will or what's thing is certain. Real estate itself will grow, both in the government's. Is an imperative which is going to happen. Hence, of all these regulatory mechanisms because important, because not only because you need to know the micro of the section that you need to do for the purposes of hearing for your case. If you don't have the big picture, will not be. You give the big picture to anybody as far as this is concerned. For example, if the rates of them are different because you've entered into an agreement on an X date with the party and then you deliver it after 3 years or 4 years based on your commitment and the ready reckoner X and today it is 2X or whatever is the other figure, unless the total picture of understanding real estate as a business is not understood by you, why this is often. So it is extremely important to understand how real estate business is done also. Not only the section, very correct, very clarity. Because the other side will only be convinced of what you say, irrespective. Last point says we are concerned real estate as growth of more than 25%. I just attended one session and there was big question marks as to why and how this is happening. Short repetition of what I said a few minutes ago. Mumbai region alone, we are going to do 300. We have 190 kilometers. Railway, suburban railway, western railway, central railway, and harbour line. We will add 100 kilometers in the next 2 years, completed. We have just completed the Cross Harbour Bridge. We are putting up a new airport and we have a coastal road. The total cost of all this is 3 lakh crore. Years, the government spent only 30,000 crores as 5 years we will be spending. We've decided to put up a new port. We have agreed to put up a third airport. We are talking about the coastal road to be expanded up to Virat. Further, we are talking about bullet trains which will come, the Delhi-Mumbai industrial corridor, the other section. It's that is going to grow exponentially. So you will see in this region, in our region, the reports just which talked about sale place is coming from the western region of India. This itself is going to further grow in the next couple of years. So what is it that becomes important? The regulatory mechanism, the direct tax is methods by which individuals can do it. 100 crore. 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 100 cr over here. We are now getting indirect investment. Real estate is going to, many of them are already done by leading here also. And I'm sure many of you are sitting in the audience are already into it. We have platforms for commercial development, which have been converted into REITs, which are otherwise there, Blackstone. Similar in the case housing, that is scale and other things which are taking place. The growth in the totality, again, in the next 5 years is projected to be between 15 to 20%. India is still growing at 6.5 and 8. Grow, compound and higher to 15. You're in the right business, madam. Completely right. So what is the real story? The real story which now takes place is the microcosm of detail of the sections. Individual person can understand how the detail act works, because will have to care of at the level at which you are functioning. But at the also responsible as charters to direct and guide people. We ride the wave. Are you going to use artificial intelligence? Your activity, advising your client, your corporate entity, your persons as to how this growth story and you can take advantage of. If we are going to just think that that's the end story, the answer for people, you will see growths which are going, which have never happened before. For instance, as I said, 50% by the richest city live in jhopatpattis. The target of the in the next 7 years, there should be no jhopatpattis, which means 50% of the will be rehabilitated. The growth of the city and the GDP of growth of the city is going to be upwards of 35%. Don't achieve the objective, it will be 25%. What am I trying to indicate to you? That we as professionals in the field of activity care of the micro and the macro. Because the growth story in terms of what is going to happen is going to be very different what we are talking about. There's no doubt about it. And let me share. First house buyer used to go for home loans 25 years ago. The rate of interest for a home buyer close to 16, 17% from HDFC, ICICI. It is the lowest. So an industry and other people will get money at 10%. Home loan buyer will get it at 8%, and it used to get at 6.5%, and you that is rates. Lowest default rate in any segment of loan given by financial institution, the lowest is retail home loans, less than 2%. The lowest in the whole world. You'll be surprised. There is no country in the world where retail home loans NPA is less than 2%. India as a country, the NPA in home loans is the lowest in the world. And hence, paying capacity of the buyer quickly goes as income levels come for this thing. For me, the affordable segment, and that we are in a quandary, and we are still facing that problem, partly because of the regulatory framework, because otherwise, developers who would also be willing to do work into these. We as chartered accountants need to explain to dichotomy, which what is that dichotomy? Government is doing job and investors and companies and IPOs, FPI and other people are ready to invest into all the segments of society. Some of them we are not investing. Why? We are able to, they will have to. We as chartered accountants are responsible to point out to the government that this is the gap. Reality with which they are living and the reality on the ground. And you and we are responsible to create that reality. And if we do that, be able to get the modify all these aspects of it, which is extremely important for us to do, because the government and the Prime Minister has the interest of the people in hand. But somehow or the other, this gap is there. So I'm very happy to share of the subject of real estate is huge and humongous. The growth is unbelievable. India and Bharat, the whole world in terms of it. You all are lucky people sitting in the western region of India, where the growth is going to be even faster and bigger than the rest of the country. That is the situation which the statistics show. The recent reports have actually been done. All this and more is fantastic. The institute, all the leaders and president and all the other people who are here today, and all of you, I'm so happy. This is in our country. Continuous teaching and continuous learning. There is no other professional body which is as good as you. I feel proud to be a part of this body. Because people think what they learned 10 years ago is good enough today. But you and I both, intelligence wipe out, change the whole world, including chartered accountants. We have nice always been with you. Then I'm sure that advantage of being, you think that things are not going to change in the next 5 years, you are there. I'm not talking about you because you all are sitting in this hall itself. The rest of the people who are in the profession who think कि हमने कल जो किया था बहुत अच्छा किया था इसलिए आज भी अच्छा और कल भी अच्छा करें, in a fool's path. And in the chartered accountant, any other good profession in the world, whether it's medicine, but it's growing great. I'm a proud, you all should be. We have a fantastic Prime Minister. The country has got led. The whole world is jealous of us. Let them be jealous, but we will continue to grow. बहुत खुशी होती है आपके साथ शरीक होने में. I feel pleasure to come over here and join and also call myself a chartered accountant. So I'm very, very happy to be over here. And thank you very much for calling and inviting me here this morning. Privileged here today. If there's any one or two questions, I'm ready to answer. Thank you so much.
Hi, good afternoon, everyone. Firstly, I thank ICI, WIRC for having me here. In fact, it's wonderful to is one such stepping stone in that evaluation. This globally, there are only REITs. It's only in India that our regulator has divided this into REITs. So it's basically real estate. Focus on infra. All of us know that every government which has come into power has always focused on infra because that producing, generating income. So it could be an office, it could be a shopping center, it could be a warehouse. Generating income. All the assets go into in any of also sit under REITs. So let me give you an example of a warehouse. So warehouse assets data center, either equity, via debt, or via both. There are mutual funds listed. Like the REIT for external trust. Well, most of us have trust. They are the ones which have the response. The REIT is with the investment manager, and the listed REIT is where it is listed. Now, where are the assets? All the assets are sitting in SPVs. Now, SPVs are special purpose vehicles where, and generally in India, we've seen that all real estate assets are predominantly held through special purpose vehicle or companies that we call. Now, under a REIT, all the assets are sitting in SPVs, which are mostly 100% owned by the REIT. So REIT itself doesn't have any operating assets. It's simply a holding company. Just to all the assets are securities. They are 100% holding companies and is in the what are they are vehicles which are measuring all the income which is generated by the operating assets. So, for example, I say this building, assuming this building was in a REIT and say it is rented to ICAI. ICAI pays the rent to the REIT, and the REIT, maybe this is sitting in an SPV, and SPV, whatever rent it is generating from ICAI, gives that rent to the REIT, and REIT in turn distributes that to the unit holders. The form in which it's distributed, I'll come to a little later. But just to understand this, it's SPVs generate rental income, goes to the REIT, and in turn gets distributed to the unit holders. Now, two or three specifics of the REIT. In a REIT, 80% of the assets which are sitting in a REIT have to be cannot have beyond 20%. Makes it a very, I would say, moderate risk, moderate return product, because you have mitigated the risk by having portfolio or go to any broking portal and buy very similar to the way you buy stock today. They are listed on NSE, BSE. You just go on any stock broker portal and you can buy. And the beauty, go ahead and buy one unit, the eligible foreign holders, retail. So, I mean, anyone who can invest in stocks can also invest in REITs. So they're very simple as such, to buy and tradable. Anytime you want to sell, just go and sell on the stock exchange. So as simple as that. Uh, to diverse for a lot of us would be holding days of owning. You have to worry about leasing that, making sure the rent, grading the asset, always wear and tear with even a real estate asset class. So those are all the headaches which you have when you are actually owning a physical real estate yourself. Now that into a all the assets which will return, the headache of managing is gone away. These are income generating, as I said. 90% of the operating cash, those are distributed. Is mandated for distribution. So under the REIT, the growth. All the mature markets don't have too much. Every return, the unit holder, India, because India is a growth market, get growth. Everybody here knows that real estate is an appreciating asset class. Even if the houses where we stay, what was the worth of those houses 20 years back and what is it worth today? The prices have moved up, and so as the value of your investment has moved up. Secondly, what happens? All of us in our contracts. So all our lessees give us, say, approximately 4 to 5% a year. The rent which is contracted today keeps growing by, say, 5% year on year. Also, what happens is this 5% generally doesn't keep track with inflation in India. Risk, moderate risk. The risk is minimal. get a kicker. So overall, I would say you would know you get about 6-7% regular income, annual regular income, and you'll get about liquid. You can just buy and sell on stock exchanges. Diversification. If you were to own in a particular, you're getting the diversity. All REITs are present across, I would say, 4 to 5 key markets. I would say in office, there are 6 markets, and in most of the REITs are present at least in 4 to 5 of those markets. So the portfolios are also diversified. So even if one market is, you have exposure to other markets. Now, how about these are instruments get yield is because inflation. The end of 9 or is a growth also. Also, what happens? Always keep seeing how do we enhance the value of our portfolio. Like I'll tell you some of the ways in which we actually create value. Like for example, if I have an asset, we'll say 15-20 years back, and the move changed, and I'm able to do much more in space. I able to 3x create value for. Also, what happens every 5 years, 6 years, making over the assets to make sure they are in line with what the generation today wants. So, and that's how our revenues also keep moving up. So these are some of the value additions we as professional REIT managers bring to table vis-a-vis anyone individually investing in these products. Now, why did a lot of, I would say, stakeholder engagement in seeing if these regulations actually helped getting REITs in India? A lot of iterations happened, and finally in 2014 is when the REIT regulations came in. And how helped the country. I mean, individual REITs, of course, have unit holders, have benefits, but even from a country perspective, Mr. Real estate actually it was pretty disorganized. It is over years when a lot of real estate companies have actually started getting listed. A lot of private equity investments started coming into this sector. You actually started seeing institutionalization of real estate. And I think because the regulations, for all those you know, are so stringent and say the best in class. So today, Indian REIT regulations largely mirror Singapore REIT regulations. So that's a kind of regulatory framework is there in India, and which is giving investors, even foreign investors, a lot of comfort. Say that it's of a known to be so. And real estate investment trust and infra, and it's InvITs are doing the same thing to infra as REITs are doing to real estate. Urban development, obviously, there's a lot of urbanization happening in India. And to meet that urbanization, real estate infra and REITs today, most of the offices are actually make activity. Obviously, REITs, which otherwise was not available in India. I'll also talk about how it's evolved globally, but I think those are some key benefits which REITs have brought to the country. Now, people may ask what is so good about REITs versus equity investment. One, these are we are limited the amount of debt go beyond 25%. We need to take unit holder approval. We need to have credit rating, and we cannot go beyond 49% of our value, which is not the case with a normal listed real estate company. They can take debt to whatever extent they want. Very similar to equity, we are listed on stock exchanges. We pay SPT, listed with PR registered holding public why REITs, all the dividend which you get from REITs is tax free. So if you get dividend from a listed company, you pay your marginal rate of tax. But if you get from a REIT, it's completely tax exempt. There are three forms in which generally REITs distribute distributions every quarter. One is dividend, fully tax free. One is interest, which is a small component, but depends from REIT to REIT. That is about, I would say, charged at your marginal tax rate. So that's one component is return of capital. That again is not, it is reduced gain tax only when you sell the units. So overall, from a taxation perspective, also, this is a very attractive instrument. Now, when I see your journey in India, it is just started in 2014. The first 4 REITs in India, out of which 3 are office REITs, and there is one shopping. More than 20 highway REITs, and then of course you have renewable power REITs, you have warehousing REITs, you have power REITs, but all been globally, wherein you had in early 20s REITs come up in Singapore. And because we mirror Singapore regulation to a large extent, so when you look at Singapore REITs, you'll find a lot of similarity with the Indian REITs. So today, globally, there are 1,000 REITs with over 2 trillion US dollar of market cap. So that big in India, we tells you that today you have a lot of real estate companies in India, like you have DLF, Kabra, Shobha, so on and so forth. In US, every real estate company is a REIT. So 98% of the real estate market cap in US is actually REITs. So they don't really have real estate listed companies. Almost everything is a REIT. So, and I'll tell you the different asset classes which they have. I mean, almost every real estate asset class and infra asset class sits under REITs US. Sit in the REITs. The largest is retail, which is your shopping centers, followed by residential, healthcare, telecom, data centers, self-storage, offices, gaming, lodging, everything. To the extent you even have prison REITs in US. So that's the kind of evolution, the journey US REITs have already seen. As I said, journey in India started with 14 into regulation. The tax regulation for REITs came in place because all over the world, REITs have single level taxation. We're all chartered accountants here. We understand what single level taxation is. Out of the 3 layers under a REIT, unit holders, the listed entity, which is a REIT, and the SPVs, it's only at one level that the taxation has to happen for this product to work. That's exactly the way it works internationally. And in India, therefore, we are taxed at the SPV level. All the money which goes from the SPV to the REIT is not taxed in the hands of REIT. REIT is a pass-through vehicle, and most of it is not taxed in the hands of the unit holders also, which I just mentioned. And then we had the first REIT into, followed by another one in 20, 21, 23. And then SEBI introduced something called small and medium REIT regulation. I'll talk about it a little later. So that's just come in 2024. How big have REITs become in India? Today, under the REITs, and this is of course REITs and InvITs together, we have almost 7.5 lakh crore worth years. This is how it's together 5 lakh crore size of REITs and InvITs in India. REITs in specific, as I said, 1.5 lakh plus crore, close to 1. FEI. So it came from FEI because they are very well, because India, I would say the Indian investors on the institutional side started bombing later. But putting in money into REITs and InvITs. So we have about 700 crore. These are only REIT numbers. So you have an equal number on the InvIT side as well. So this is a kind of interest which you've seen from the institutional side in these products. On, I would say that we are just about there's a long way. So what do REITs actually give us? So if you look at what REITs have given over the last 5 years and compare it with all the other instruments, REITs in the last 5 appreciation in the real estate also keeps growing, the income starts growing, the product also starts giving you growth. Either it could be in form of the yield moving up or the stock price moving up. And get asked, is it a good instrument? Pair it with even over the last risk model. Low built in, 90% is rent generating. So your risk is mitigated to a lot extent. And despite that low risk, you're actually giving returns which are very close to equity. Now, obviously, it depends on the cycle. If you've invested in a very cycle growth cycle, then equity can give you even 2x, 3x, 5x, 10x. That's not the nature of REITs. REITs are generally very range bound. They are not in which you will see moving up 2x, 10x, 20x, 100x. It doesn't move. Similarly, when the markets start falling, you'll not see this generally very range bound. And that's the reason I say these are instruments which are much safer from an investment standpoint. We've covered this. Sorry. What REITs to grow in the office stock, which is available 100 million square feet, only 4x stock, which still needs to come in. So you'll see more and more REITs coming in the years to come. Same on the retail side. Today you have only one retail REIT in India, shopping center, which has about 10 million square feet of area. In India, you have almost 70 million square feet of shopping center. So there's again a huge potential for more shopping center REITs to come into India. I'll quickly. A lot of you would this fractional vehicles. Building in a particular market regulated, and even these vehicle available are REIT. Any portfolio which is between 50 to 500 crore can actually go and sit in an SMB. So any manager overall construct, these are very similar. And then obviously this have been built, like for example, in a conventional REIT, which is unit. But here, because these are figures which are still new, SEBI has kept a 10 lakh of investment limit. So only if you wish to invest, you will have to take an exposure of at least 10 lakhs. And also what happens that, for example, some manager has 2 floors in a building in BKC, and he can, which are worth say 50 crore, 100 crore. They can actually move that to an SM REIT and have units. But the risk profile is a little different because these are smaller, a little more concentrated. But otherwise, if you want tomorrow, say, I do not whole of India, I only like a BKC market and I want only a BKC exposure, then maybe SM REITs could be something which could interest you. There is also a concept of self-sponsored REIT. So generally in a REIT, you have a sponsor. Like for example, you in amongst all the REITs that are there, you have Raheja, which is a sponsor of Mindspace REIT. You have Blackstone, which will work. Where even if you don't regulation which SEBI has enabled, internationally there are a lot of REITs which are professionally managed. They don't really have a sponsor. So that is a framework to make it far more evolving, far more participative. So that's been the every REIT phase REIT is more focused. Clearly, one I think this you look at the other criteria for you to decide from a return cost, the which despite it is not that any cycle or despite faced with something like a COVID, we could see some fall. Probably could be if a manager way which is managing the REIT, then that could be governance. So while SEBI has put in a very strict governance framework, but there could be still a chance that one manager goes and screws up a REIT. Those could be the challenges. Otherwise, I would say it's a very mitigated risk instrument. And purely because of the nature of assets that it has and the regulation that 90% should be distributed, 80% should be rent generating. So it actually brings down the risk to a large extent. The decision making is by the manager who is independent of the REIT, and the REIT mostly owns 100% of the SPVs. In some cases, So firstly, we've been in existence, while the regulation has been here from 2014, almost a decade. The first REIT happened in 2019, so we are about 6 year old. Say offload 100 crore of stock on the exchange. There it could be a little bit of a nuance for two reasons. One, the product is very know the product yet, and therefore that is one reason why the liquid low, not for individual investors at all. I mean, today each one of us does volumes of anywhere between 5 crore to 20 crore every day. So for an individual investor, if you want to sell 10 lakh, 20 lakhs, no, not an issue. Is very well known. So therefore that, in a way contributes to lower liquidity. And I think secondly, we are not a part of indices. So today, for example, a lot of companies are there in Nifty 500, 250, some are in Nifty. Today, despite in any of the indices, we are classified as hybrids. Very similar to a large extent like equity, but we don't find ourselves part of globally. So, for example, Mindspace is part of almost 100 equity indices, which is S&P, MSCI, FTSE, but we are not part of the Indian indices. So there is a consultation paper which SEBI has released about a month back. Stakeholder comments on whether REITs and InvIT should be put as a part of indices or not. So if that happens, that will play a long way in building up the liquidity. Yeah. Yeah. So in terms of return, as I said, and maybe I'll just go back to the slide. These are the kind of returns REITs have given. So it's almost 13, 14%. It's a combination of yield. Year could be about 6, 7. Price also keeps up. Return of capital there, you actually reduce from your cost of acquisition. So effectively, say you bought at 300 and I've paid you 10 rupees at return of capital, then your cost of acquisition comes down to 290. And so you've sold the unit at 400. You pay tax on 110. So effectively on the 10 rupees, which I'm giving to you by way of return of capital, you're not paying tax today. You'll pay tax when you sell the unit at capital gain. So the manager charges the REIT for managing the assets and managing the REIT per se. So that is, so the distributions which you get are after deducting the charges. So that fee can be anywhere around 3 to 4% of the rent. That is the common, but this lowest I can say across the globe. Globally, the fees are for REITs, they're much higher because there's huge amount of work that goes in maintaining the assets today. You have to make sure that they are managed well, tenant complaints are taken care of. You have to regularly keep leasing those assets. Like I handle like funding for the asset, acquisitions, divestment, investor relations, everything. All of that is done by the manager. Therefore, manager charges that fee. But whatever comes to you, today there is no cap. Today there's no cap, but today if we have to change, then we need to go to our unit holders for change of the fee. So we'll have to go back to the unit holders asking for change in fee. Suppose, yeah, exactly. If I want to do from 4 to 5, I'll have to go back to the unit holders and say I want to do 5. If the unit holders approve only, then I can move to 5, otherwise not. Manager, they pay the salary. Income comes from fees taken is paid by the REIT, but the people are all sitting in the manager. So like I sit on the manager, I don't sit on the REIT. Correct. It's maintenance, insurance, property tax. These are generally the expenses at the asset level. No, nothing more. Yeah. So if you, there are something called data benchmarking institutes like CAMS on, FinTech, CARE, I think, where all the four REITs are actually compared against each other. So if you go to any of their platforms, you don't really need to go to respective websites. All data of all the four REITs compiled properly. All of us are in old tax. So today we pay, if you have more than 400 crore of turnover, we pay 34%, 34.5%. If we were in the new tax regime, holders, all of us, all the REITs have opted to be in the old tax regime. We've not moved to, we pay the old taxes under the old tax regime and not, so that's the difference between what we pay versus what normal companies pay. So we pay higher tax at the SPV, but then we get exemption at the unit holder level. And all of us are in the old regime. So whatever we pay you, therefore becomes tax exempt because we are paying higher at the SPV. Yeah. Yeah, it's a continuing obligation. So at any point in time, because of the valuation, and all REITs are supposed to do valuation every half year. If because of the valuation, the 80-20 moves, then you get 6 months to rectify and come back to 80-20. If say by you, because of the valuation, it's become say 79, you get 6 months to make sure you rectify that. Yeah. No, it's done. So valuation is as per Companies Act. So therefore it is the registered valuer. What we also do, all the REITs, what we also do is we get the IPCs, the international property consultants, like to name JLL, Cushman, Knight Frank. We get them also to review the valuation, because what happens is, because you have a lot of FPIs who have invested in REITs and valuation is very critical for them. Sometimes they don't understand who these local valuers who are registered under, say, Companies Act, but they are very well versed with the way JLLs or Cushmans or Knight Franks look at valuation. So we do two things. If you go to our website, you'll have two reports. One is the valuer who's registered valuer under Companies Act, and the other one will be a valuer, not actually a valuer, but I would say a consultant. We call them IPCs, who would have looked at the assumptions and they give their own view on how they see the valuation. Correct. Correct. No. Sorry, what's the view on? You mean to say SM REITs, right? So SM REITs are a very new phenomena in India. It's only in 2024 that SEBI came up with the regulation. There are a lot of fragmented pool vehicles available in the market today. Some of them have already moved to SM REITs. I think they're already, one of course is listed, 2, 3 are in the process of getting listed. So I'm again saying there is your, it's all your choice. What do you want? Do you want to be in a large mainstream vehicle, or do you want exposure only to say one particular micro market or one asset? If you want that exposure, then probably SM REITs is something which you can look at. And also what happens is when you're talking about a conventional REIT like us, so we are REITs who have managers who have like decades and decades of experience. We have large portfolios like 30, 40, 50 million square feet. These are smaller portfolios. So it's all about, I would say, your choice. They are like you have small and medium IPOs also. You have large mainstream IPOs. It's your individual choice. Regulation is very similar. SEBI has made sure that they are also equally regulated. So from that perspective, I don't think there is an issue with regulatory environment for both. It's your individual choice what kind of investment you want to see. Yeah. I mean, uh, I give you a broad perspective of what SM REITs are. And obviously, every individual SM REIT will differ from each other. Yeah. Somebody, yeah. Even more. Because your, for example, related party transactions, if they are beyond a threshold, they actually go to unit holder voting and where only majority of minority vote. So the related party doesn't vote. So in terms of RPTs, these are even more stricter than normal listed companies. Yeah. Yes, yes, that's what a lot of people have done. You can use that instrument. Yeah, I guess no other questions. We can close here. So thank you very much for your patient listening.
All right, good afternoon, everyone. Thank you for over. So day 2, right after lunch, typical session. मेरी तरफ से तो आप सबको अलाउड है कि आप don't worry. Hope I can add so that I get to understand. Show of hand, if you are involved in any kind of real estate activity, whether you are involved in a control of function, taxation function, fundraise. Okay, let me ask you, controllership function in real estate. If you audit or you do tax in real estate, can I have a show of hands? Oh, fantastic. That's few of us. Excellent. And how many of us are active? Super knowledgeable audience, and I think let's make this more interactive and let's make it more like two-way communication rather than me just. So let's start. Here is the agenda. Simple. We'll talk through fundraising in the 3 largest. All the structure. It's be a part of this for 2 decades, or मेरी त्वचा को देख के आपको लगे कि मैं बहुत young लगता हूँ, so I'll take it as a compliment, right? So, so opened up. Was looking at. He was looking at doing investor round, right? 2005, FDI starts in the country. This is a new gamut which opens up. Press note. I joined real estate. There were, believe me or not, list of investors who were institutional, maybe 90% of India. We had investors from Europe, Australia, Japan, US, South Africa. Country was very, because obviously one of the world's largest populous countries. We were obviously we continue to be very short in terms of the total amount of houses that we have. It opens up, 100 of these guys come in. What happens? Of land. What FDI was talking about. While it was that, people were buying like 500 acres of land, saying that, listen, this is India. Obviously, you need a lot of housing, a lot of offices, a lot of retail. What happens? By 2007, 8, whole bunch of $1 billion of real estate has come inside, and no one has an exit. Because press note 3 clearly says that unless you have developed a particular plot, you cannot. There's no money because largely the land, right? Approvals and in terms of construction, pre-sales will take care of everything. Because India is realizes at how it's going to work. We are a very large, still continue the time. FDI is not working out, right? There is a huge time for correct whole bunch of, so from 100, we probably shrank to like 25 going, say, 2009, 2010. Whole bunch of guys having no exit, right? They have no clue how to exit because they have either bought commercial, large commercial, or they have large track. They don't know how to exit. Then starts the next phase. So PE, AIFs are out. Next set of guys who come in are the NBFCs, right? So the formula was simple. You raise $1 of capital, okay? The banks will give you $4 to $5 of capital as leverage. You are 4 to 5 times leverage. So your cost of borrowing is typically 8, 9, 10%. You are lending at, there is a large spread to be made. So even after expenses and all getting knocked off, you have a good 6, 7% of NIMs. That you are not lending. Works superbly well. Again, that happens for the next 5, 6 years. There is a lot of money chasing relatively good, lesser good assets. Also get funded. PFCs also start. Was not in. Was very fungible. Money was moving across projects. The result was, again, what we saw was in 2019 was the island. Across the country, everything had come to a standstill, right? So NBFCs were, so whole bunch of them, like Altico, mismatch kind of situation. Books were just throwing up cash flows. Their borrowing books had maturities which were going on. Okay. There's the 2019 piece. So we have FDI. Now what happens? We got to start building the all over again. This is when you start. Probably as real estate professionals took a little bit more time to mature as an industry. It would have been helpful if we had matured a little faster. Because in my current role, as I talk to a lot of international investors, the wounds of either 2007, 2008, 2011 or 2019 are the first things which they would think about and say, hey, look, you are saying that there is a new India in new real estate in India, but we still remember what happened to us and how difficult it was for us in all of these eras. So, but we are in the new phase of building, 2020 to 2025. Now we've kind of filled down a bit, right? So the banks are extremely regulated by RBI. So RBI 2021 said, nothing doing, you will not fund any kind of. So stop earlier. NBFCs were told later that, okay, now you also can't do, which means that relatively, if a developer had, he really had to look at private equity capital. The thought process goes for AIF CAT 2 was, let's get only a very mature set of capital, the risks and rewards to actually participate in this kind of debt or this kind of capital. As we talk through this, also what has happened is the flavor of money has constantly changed, which means that while there was a lot of equity like, or if a developer 4 crores an acre, a private equity guy would come and say, you have an amazing piece of land, right? You have approvals in place. I will give you, so this is 2005, I'll give you 10 crores an acre, right? You can take the balance money and you can go and buy another. So some developers obviously went and bought land. Some people went and luxury cars. So now, end result of that is that people are saying that, look, I cannot look at a equity like relationship with a developer, right? Because if first of all, entry point is very difficult, right? In terms of whether we will have a consensus in terms of what is your acquisition price, which is a fair acquisition price, we will never be able to come. Every DCF model that we were running earlier on realized that, those are only on Excel, and getting back money was really, really difficult. So increasingly from debt, we move to mezzanine debt to moving to pure debt, right? So now when we start talking about and people start asking me like, is there equity available in the real estate market from a large asset perspective? There is really very, very limited equity available, especially when you start looking at the biggest piece of real estate, which is residential, right? So equity, and we'll talk about through the structure. So we will talk about what's available from a commercial and a warehousing perspective. Structures also over a period of time has largely got impacted with the ability of how investors could get their returns from the country. So right now, we are in a sweet mix, right? So we have 7-8 HFCs/NBFCs which are active. We have close to 14 to 15 AIFs which are active. All in all, anywhere between 30-35 different kinds of capital which is available. Where is this money going, right? Which part of the, of course, India being a developing economy, the largest, we have really large, we have 4 lakh short homes of homes. So that's where bulk of it goes. So we track anywhere between $4 billion to $5 billion in terms of housing, whether from domestic or from foreign. The second biggest piece, which actually had become a very large piece, was the commercial piece of the pie, which is ready offices, IT spaces, SEZs, which was attracting close housing, which has really the poster boy of attracting FDI and domestic investments. So we are seeing anywhere between 1.5 to 2 billion in the warehousing space, and hospitality, greenfield, resi, anywhere getting attracted. Now, having said that, it's great that we are evolving, right? So we also have newer emerging things. So data centers has been a very, very attractive asset, close to annually $1 billion, $1.5 billion, which are equity in. We have also some small shoots which are happening in terms of co-living spaces, Tata offices, all of those pieces. let's take a deeper dive into what is our largest residential. Okay, I'll quickly run through what all know it works. So we had the IBC which came in, we had RERA which came in, we have PMAY, we have GST. All of these things have made from 2017 onwards a relatively very key work on. The urbanization in India is rapidly growing, right? So we can, the affordability index is constantly coming down, which means that buy homes because of income levels going higher, while we continue to being the smallest in terms of developing 11%, can only go higher from year on, which means that more and more opting for mortgages to do capital formation in their personal balance sheets. Steadily, prices have been increasing. So on a pan-India basis, we are now an average of close to 7,500 rupees. We all sitting in Mumbai may think, "Arey, 7,500 you will get Vasai Virar." But look, when we are talking, we're really talking about India, and Mumbai is not India. It's inventory overhang has been going lower, and so things are looking up. Okay, so let's now talk. Could look at different parts, the life cycle of real estate development, and what does it attract. Okay, so the first piece is, of course, the raw material, which will essentially because at the rules in place here. So largely he needs to look at doing equity participation in this. So if that equity or what kind of developer it is would cost them anywhere between 16%. Then after he's got tools in place, that's where PFCs to take alive. So they would help him in terms of money to get approvals, in terms of construction, and relatively his project up to speed. That could cost a B1. Finally, a developer, when he has a slightly more mature project where actually the receivables are established, the receivables start kicking in, we could look at construction fund, which would cost anywhere between 12 to 15%. 12, sorry, 8. How large is the size of these markets over the next 5 years? When we talk to developers, we are broadly looking at towards for say $12 billion. We are looking at a refinancing market of $6 billion. We are looking NCLT and special situations of $1.2 billion. So fairly large. Okay, so I've put down some prints in this market. What kind of sizes which they look at. So if you look at, guys, the largest guys would be HDFC Capital, Kotak, PNG, PAG. They would largely look at transactions which are more anywhere between 100 to 400. HDFC recently, so this is HCare, had platforms. They would like to do that. They are backed by India, right? So they are now with HCare dollars. Similarly, with Kotak has 2-3 different pockets of capital with pockets. They have their banking pocket. All of this They would look at transactions anywhere between 200 to 400 crores. You would have very active participants like Motilal Oswal, ASK, more looking at the 150 crore kind of transaction. Again, all of these participants would look at coming alongside the developer at an early stage, helping them in land acquisition, getting them construction finance. The Aries, Bain Capital, special situations would largely look at portfolio companies from other financial institutions or fund a developer through an entire portfolio piece. Okay, so who can get funded, right, in this entire mechanism? Right now, the way we see it is largely the fund would look at focus for all of the developer for the investors is largely the large cities, which is Mumbai, NCR, Bangalore, Chennai, Kolkata, Hyderabad. We have relatively few people who are actually looking in at. I think one of the very interesting transactions in this space was which, like someone Blackstone, who was otherwise not participating in residential real estate at all, bought a controlling stake in Kolte Patil in Pune. Now, which means that this kind of transaction really had stopped. I have never seen these kind of transactions happen. Holdco transaction happening post 2007. This was interesting because it's the first time private equity company, which also talked, I think, a lot about organization with India of doing business. The largest the largest global investor believes that they can acquire a country. Okay, so what are looking? So where relatively a lot of things were kept to the developers, where we said that, hey, look, you can go ahead. We will put the money into your bank account. We leave it to your discretion in terms of how you manage the project. But now that has changed. Increasingly, every investor is looking at saying, we will now control all kind of escrow accounts. We will do very, very active fund management. So we at SWAMIH would like to believe that we've been, quite taking the lead in that aspect. We said that, look, if we really need to deliver money back to investors, it really means that we need to work alongside the developer closely in terms of looking at budgets, looking at special situations like saying, if sales are not happening, what are you going to do? Are you going to appoint an alternative developer? Are you going to look at appointing a sales agency? How do you go and negotiate those particular contracts? How do you look at probably a contractor who can construct faster? How do you look at changing some part of your configurations if in case some configurations are not selling, right? So these are things which I've come across. You are really looking at promoter having skin in the game, which means that you really don't want that after he's got some kind of really not interested in the project. You really want a right mix of debt and equity to be that should be closure visible. So which means that really you really don't want to have a situation where you are sales happening to get financial. Really are looking at saying that facility, which is now going to cover maximum with minimum on sales actually happening in, right? So everyone wants to play in safe, um, and you have strong covenants around cost, which means that you want to have early warning signals, which means that if you really believe that the developer is going to go over thing, you don't wait till the end of the project. Uh, you ask the developer to bring in equity contributions through the life of the project. This is increasing. PFCs have started asking develop. So that's the journey that we have seen in terms of residential real estate. The queue from portfolio companies and what constantly I'm seeing in news. Land, there is exuberance in the market in terms of buying land, right? Which means that we are again touching out new peaks in Gurgaon, in Noida, in Mumbai in terms of how much you can buy land. FSI is available, which is good, right? I think for the longest time, what we were doing is we were constraining the amount of FSI which was available. Now, largely, I have seen that most state governments have said that, look, let the supply come in, okay, and that will ensure that the pricing remains rational, right? So that's been happening. We have seen increasing amount of digitalization which is happening on the ground, right? So every new state that we enter or every large state, we are seeing that the lot of the records of approvals are actually happening electronically, which means that the same thing that we have in faceless as those kind of things are happening approvals process as well. So the amount of discretion which is actually available to a developer or to an approving authority is becoming lesser. Certain things are taking more time, right? So of course, as India is getting more environmental conscious, approvals are taking time, which means that now developers really need to plan in advance. And so see, everything the developer is planning, the lender has to follow suit, right? Because now we are in the same page now. So my transaction structures are also largely getting determined by the timelines of which the so I have like a six rules place. So the few things we are seeing increasingly, there is a flight to quality which is happening in, which means that the larger developers are increasingly getting squeezed, which we are the market share of listed developers, which used to be under, if you look at it, probably a decade back, that used to be under 20%. Now, the listed guys in terms of new market share, in terms of new launches, are in excess of 30%. I see this trend continuously increasing, right? Which means the larger projects are only the really large. Also, from a customer perspective, they are saying that, look, if I have not heard of the developer before, if you don't have a track record, I am not ready to participate in the pre-sales version, right? It's only if you are a Godrej or a Prestige, where you can actually depend on to kind of, you need to have some kind of financial closure in place. In new trends that we are seeing the large developers looking at a national footprint. This thing was happening in 2007, 2008. DLF Unitech come into Mumbai with large aspirations, but then you realize that look, it's a very different ball game dealing with the NCR and dealing with the Mumbai, right? They decided this is not something. They sold land to load up. They went off. Now we have had DLF come back into Mumbai, right? So they're doing a large project in Andheri. Prestige really is becoming a very national brand, right? So they recently, if you've read about, have you all read about the launch in Ghaziabad? Sold over 400 units on at launch price. So um, you are having Purvankara, you are having Shobha, you are having Embassy, all of these guys, especially I think due credit to the South India developers, they are really having very large aspirations. They also bring in a lot of interesting quality of development to other places, right? So that's a phenomenon. So these are some trends which are living tribe. So we'll move on to some of the other asset classes. So let's go on to commercial. Let's understand what's happening in the world in commercial. Okay, so good time to be still. We were in COVID. We thought that look, the concept of office is coming to an end. The West continues to think that way. The reasons why the FDI in commercial is been following is because what the Western investors are seeing in their home places. So if you start looking at US, Europe, the kind of absorption that they are seeing in commercial and the kind of vacancy which they are seeing is quite alarming. Has been completely on a different footing, right? So we've had the they are saying commercial, but between 22 to 25, we are every year setting new records in terms of commercial absorption. And one of the key things is that we really are becoming the knowledge power of the globe, which means that if anyone wants to have a knowledge processing unit, India is just becoming the natural choice. I think we also have to be thankful to COVID for it, because in COVID, people realize that, look, if you were sitting at home and working and delivering what you can do, then someone in India who is hardworking, intelligent can also do it, right? So the upside of that is now we are seeing, we are really becoming the knowledge backbone of the world, but we need to be cautious, right? AI is coming and AI has changed things rapidly. Having said that, has AI the complete impact of AI in terms of absorption of commercial? So far, no. So absorption continues to be strong and also continues to be strong. So that's where we are. Interest rates are sweet spot. The demands are good. Shift to sustainable offices. I think one of the big opportunities for commercial investors is now largely looking at going green, right? Going green or getting gold and then LEED certified. Increasingly, tenants are coming back and saying, look, I'm ready to pay you a 5 to 7, 10% in rentals if you convert your buildings, right? So the key trend that we right now is publishing of all the grade B buildings, the grade B stock, which we have that requires is increasingly coming in through investors, where they're saying that equity, right? This is where, while in Resi, we are not seeing any kind of equity play happening. On the commercial side, we see a lot of equity coming in, where investors are comfortable even entering at land stage, right? So they meet with a developer in a large tract, take the approval risk, build on lease, and then kind of look at REIT alternatives, right? So it's an interesting time to be in India. I think we are amongst the only bright spots in terms of commercial across the globe. So what's factoring in commercial? We continue to see top 6 cities. Good asset quality. So if you have a good asset which is up for sale, you will find really suitors coming in. Sorry. So you will find in a lot of suitors coming inside. If you have a great tenant profile, you have good lock-ins in place, a good 3+3, well-negotiated escalation contract, all of this work. So we have a large unmet market. Poster boy of commercial has been India again 2007, stayed in India till 2012, did nothing, right? Didn't do, saw all the in other investors bleed, then leave India, and then a strategy else was taking, which says I will get a platform in place. So they partnered with Embassy and they said that we will go ahead and create a huge stock of commercial, which will be grade A stock, attract the best of tenants. This is a time where we did not have the REIT in place, right? So the REIT architecture, while it was still under design in 2009, 2010, Blackstone was quite a pioneer and saying, look, we know that this will happen. The big question earlier on was that if you enter into commercial, how do you exit, right? There is no single buyer to actually buy you out, right? So HNIs in India are there who can cut like a 200 to 50 crore checks. The time you have like a 1,000 crore, 2,000 crore asset, who's going to give you an exit, right? But the bet which they largely took is that REIT should happen. So 2012 to 2015, 16, they bought marquee assets. They got the best of tenant place and first REIT. They were patient in terms of even diluting. They took 4 years to completely dilute that entire piece. So they clearly set the standard for a lot of investors to come into India. So, we had Brookfield come in, we had GIC, Capitaland, all going more aggressive, Maple Tree, all going more aggressive than what they were earlier looking at. So demand supply looks good, vacancy looks all in process. Let's look at some of the strategies which various developers have used. So between Keppel, so you can see this is one of the a slightly different asset class where people are saying that look, really looking at entering at land state. It's not just foreigners who are dominating this asset class as well, who have the REIT, there is a ready exit play in process. Now, one of the things, right, if you are an investor in commercial, is what kind of, right? Do you have internal construction design capabilities? Do you have a leasing capability in place which can ensure that you can deliver the asset relatively without relying on external consultants? So that becomes a very crucial play as you like to play into this game. That's on the commercial. REITs, while I had on REITs, I believe it was covered largely by Ms. Preeti. It's been interesting. While we think that the REITs, the three large of one of them, they've so far given decent returns, not wow returns, but forward, it is a very good proposition for retail investors like you and me to actually look at REITs as an option, and they continue to hold some marquee assets. Okay, so the new game, right, which is ownership of, so which really means that if relatively you are a smaller investor, or you can get a pool of investors in place. There is a lot of fractional assets which are not completed buildings but some individual floors. So for example, Godrej here in BKC, there are some investors who own individual floors. So those come up for sale. Similarly, you will have some IT park which comes up for sale, and these guys, the fractional ownership guys, have been quite active. We have four of them who are there. So prop shares, Tata, HBits, others. Yes, we've also seen some corporate governance question marks which have been coming around them, but I believe, like as we go through the stage of maturity into any asset class, we'll continue to see that more and more governance and more transparency comes into it. We saw that in residential. We see that in soon. So reach the draft notifications are out. You could actually look at doing like a 54 kind of listing as well, which means you don't need to really own a large portfolio in place. The minimum is also much lower than a regular REIT. You are allowed multiple schemes. Governance structures are still in place, right? So you still can't do related party distributions are controlled. All of these pieces. So I think this opens up a lot more avenue for micro investors. Large opportunity in terms of what is strata sold, strata available, or too small for a large REIT to go ahead and acquire, now available for SM REITs to acquire. Okay, I know we are running out of time, but we'll quickly move on to the last piece, which is the warehousing piece. This has been the most exciting poster boy of growth over the last 3-4 years in India. Side by side, what's happening in commercial, we have seen that happening in the warehousing space as well. So commercial, it started in 2005. This one we really started 2017 onwards. Right now we have close to 16-17 players active in the warehousing space, largely equity amount of funding. They are supported by PSU banks once the leasing actually happens or the construction is taking place. I think, with the interesting piece over here was when Welspun started raising like a 2,500 crore domestic capital, right? Which means that they could mobilize, while most of this capital was foreign capital earlier on. Now what has happened is a lot of domestic money has got mobilized, and Welspun has really shown that, right? So 2,500 crores raising is no easy. Exciting. What's the demand drivers? Okay, we have GST which came in. We have excellent highways which are coming in. E-commerce has grown in drastically. The make in which are taking place, which really is making India one single market. Right? This is the real push for warehousing. Low vacancy, it is fantastic. I mean, you just start looking at the numbers. You have overall, when you start looking, so grade B stock has some amount of vacancy, but when you start looking at grade A, there is really very little vacancy happening, right? So which means that if ever there is an asset which is up for sale, really it has like a lot of takers which are coming in. So you can see, even if you start comparing to where we are from a global perspective, you look at where China and Japan are, and compared to that, we really are at a very nascent stage in terms of warehousing. Again, we don't want to make the same mistakes that we made in residential and trying to run too fast, creating too much supply and ensuring that investment out. What are the models? Let's look at some of the models that actually work within warehousing. I think the most popular model is where they have said that, look, you are a funder come a developer, which means that you really will enter in at land stage. You have the ability to construct. You have the ability to buy large aggregated lands, and that's what players like Horizon, Indospace, and all have done. Um the second piece is where you start looking at third party development companies. So you look at partnering with existing warehousing players, you look at their pipeline, and wherever there are gaps you actually try and fill in those gaps to be there. These are some of the investors who've done this. In the core equity strategy is where you start looking at putting in equity into buying out warehouses. So the yields have been a little low in this space. There have been some large portfolios for sale, but there's so much capital which is actually chasing those portfolios that you're looking really at a sub 7.5% kind of a yield. So I tried to keep it within the timeline that I have. I've covered a bunch of it. Sorry if I've exceeded time, but that is me. I would love to connect with all of you all on LinkedIn. That's my write into me, and we'll definitely keep in touch. Happy to take any questions if you have. Yeah, sure. Thank you. That's the easiest one which I have, but thank you for asking that question. 2019, like we said, we had into the country where a lot of NBFCs had balance sheet mismatches. The CIBIL scores of all the home buyers were getting becoming a problem. There were a lot of incomplete projects across the country. That's where I think the government of India came with an amazing brainchild. They said that, look, we will come in with a AIF. We will give a independent player like SBI Ventures the mandate to look at completing incomplete projects. So Swami comes in as a senior secured lender into the projects. We really play an active role in working with the developers in doing last mile completion of projects. Our money is available at relatively quite affordable, good rate at 12%, payable when able. We are probably the only fund in the country which has now done projects across 30 cities in India. We have exited 40 plus projects. We are in the process of exiting. We've got part exits from 40 projects. We have done some projects like Amra, which was a huge case where there was a large portfolio which had to be sorted. So that has got delivered. So just proud to be a part of this journey. And thank you so much for asking the question. Yes. Yeah. So in Swami, the criteria is that you should have spent 30% of the project cost, including land. So overall, if the project, if you got 30, you actually qualify for Swami funding. That's the cost, including the land cost. Yeah. So what we've done with the existing lenders is we have a provision to do cash flow sharing with them, which means that now that we are putting in money into the project, once the project starts delivering cash, it can be shared with the existing lenders so they can get some part of the exits. Because we have done a good job. What has also happened is a lot of new lenders have come across to us and said that, no, we don't mind giving exit to old lenders and sitting on a second charge as long as Swami is sitting on the first charge and delivering the projects. So that's been happening. Yes, we've also had a case where there were multiple phases into a project where Swami would come into the first phase of the project and the second lender could move in the second phase of the project. So they still have collateral which is actually backing them. Well, it's also because there is primary capital which is needed into the project.
And the primary capital has to be in the both in terms of cost efficient as well as in terms of the trust that this project will actually get over, and that's the confidence we actually bring in to the lenders. Now the sharing is something which we've done a maximum of 30%, but it can be anywhere between 5% to 30% depending on project to project. So there is no single way to define it. Just depends on the economics of the project in terms of how much we can share. Sorry, sir. It's a 12% payable when able structure. Yes, flat. Any other questions I can take, or we can? I think we are. Sorry, come again. So we would prefer to do a minimum 50 crore kind of investment going up to 400 crores. We relatively in SWAMIH 1, we are in the last phase of the entire investment period. Our investment period gets over in December. So in case, if there are projects that you would like to work alongside us, please bring it as fast as possible. Yeah. By all means, yeah, we would definitely like to look at as many projects as possible. Good. Sorry, we are out of time, and thank you for being a very patient audience. I hope this was an interesting session, and we should definitely keep in touch. Thank you, CA Institute. It's always good to get back to the alma mater. Good to contribute.
Yes. So good afternoon, everyone. I am CA Nishchit, and it's an honor to moderate today's session. And we are deep diving into the topic, AI and automation in real estate, revolutionizing reporting, compliance, and control. And we've heard a lot about AI. AI is not only disrupting the boardrooms, it seems like they are disrupting the construction sites as well. Yeah, with that, let's do the same exercise with the last speaker also did. By show of hands, can you all tell me how many of you used spreadsheets like Excel to manage your tasks, to reconcile GST, manage your compliances, due dates? Cool, it seemed like obvious. Why are you asking this question? But that brings me to the second question. How many of you are actually using automation tools, AI tools, and robotic process automation tools daily in your practice?
Very few, yeah.
So yeah, that's the gap that we are trying to bridge. The entire attempt of this moderation would be to bridge that gap that you could also feel in this room, from Excel to excellence, isn't it? Before starting, I'd just like to lay out some context so that people also understand, and then we will quickly move into the real thing, understanding it with real estate. But first thing first, what is automation? Okay, to set up the context and in a very simplistic manner, if X happens, do Y. If software is given an instruction of such kinds, then it is called automation. For example, if a customer makes a payment, some auto generates and receipts and sends him an email, it's not AI, it's automation. Second thing, robotic process automation would mean copy paste with precision. Okay, it's like doing repeated tasks. For example, at the month end, an RPA bot logs into your bank portal, downloads the statement for all the project XPVs, uploads them into your ERP, exactly how your junior staff would have done. That also error-free. That is a robotic process automation. Third, we will come into AI. That is a system that can learn and adapt by itself. Example could be an AI tool analyzes your past vendor payments, raises a red flag. And when a new invoice seems unusually inflated, it doesn't match with the historical benchmark, it would highlight. So it has a level of intelligence. Why did I do this? Because I did not want to mix up between the three terminologies, which is loosely stated as of now. With this, I would like to begin, and I have CA Pawan Kabra and CA Akshay Bangar with me. Welcome, gentlemen. And yeah, let's begin. An audience, I would like you all to take notes. Feel to jot down all your questions because we are going to have a question answer towards the end also. And wherever you feel like you can laugh if it is relatable, and rigorously nod your head if you find it helpful to you, and you can clap as well. So let's begin. I'm trying to cover up 7 thematic blocks, and I would ask questions to each one of you. Some questions, if both of you are comfortable, you can start off. To kick off, the quick off question, and this could be to both of you guys. In one sentence, what's the most transformative impact AI or automation has made in the real estate function?
So as far as automation is concerned, now data accuracy and speed of data availability to management, that has improved a lot with all that automations. So now it is easy for CEO of the company, CFO of the company to track that progress in whatever functions they want to monitor, and that then taking appropriate decision on timely basis. That is what the contribution of automation in real estate industry as well.
So first of all, thanks to all of you. And since it's a last session, I don't want you already have with a lot of knowledge and everything. My simple say is basically 10 years before or a decade before, we all used to search property how, like Jatin bhai, if there's any some flat show or something like that. Now say it's a for customer market has been changed tremendously. For any of the app, if you'll go with any of the app, you have all the properties with all combination, rate, size, which can suitable for everyone. So I think so that's the biggest automation in the industry, that it has changed the customer behavior, it has changed the market behavior and the transparency it bring out. So I believe that's a biggest automation where you can select property, you can decide how to connect with the dealers, everyone. I believe that's one of the biggest automation.
So it seems like real-time reporting and insights that we get from the systems has been the biggest impact. Let's move to the second theme, that is reporting automation. And this section I would like Akshay to lead, because he's the one who looks into the MIS with his organization as well. So in your current automation and dashboard setups, what are the some of advanced or project-specific KPIs that you actively track beyond the obvious metrics like sales and collections? For example, do you track metrics related to project execution, cash burn rate, cost to completion, customer aging, RERA-linked milestones? How has this helped in proactive decision making?
So basically, very simple. See, for us to build a product, so for us, the end user is very versatile. You know, one is looking from 1 BHK to 6 BHK. The range of thinking is very different. For us, important is project should get completed on time. Second, our cash flow should get managed. So important is like I have to take care of my cost of completion and the RERA milestone. These are the 2 important factors which I think so with this RERA reform, everyone has to take care. So I will say it's not possible manually to track. Otherwise, I can't meet all the customer expectation. If I have to take care of it, obviously I have to set up my structure in a way where at any point of time, our MD should know like what is my cost of completion for the project. So obviously our reporting layer, like if I'll get before that. So very simple guys, like if I will start first, set up your structure in a tabular way where I will say all your reporting requirements has to be get captured. Then post that we'll go on an layer where we have to present like it's in Power BI, etc., etc. 2 important factors has to be taken care. First, like what will be the cost of completion for the project? Do I have the sufficient fund? If not, then how I will get access into the market? If I have all this information in a single graphical way, that itself give an in-depth analysis of the project and help us to track, okay, like my RERA milestone should not get delayed, my cost of completion is on time. If I have all the factor with the drill down functionality, then obviously it helped me. And without automation, because there are multiple level of data which will get involved. It's from the project planning to the execution team, then EPC team, marketing, sales, Everyone have their data set, and at the end, it helps for the cost of completion of project and my cash flow. So obviously, this two factor I can't imagine manually. If I have to manage it manually, not possible. So obviously, the reporting layer is only could be any of the tool. If how many of you work on Power BI or SAP Analytic Cloud? If I want to know, like I worked on it. Anyone else? Okay. So see, that's the I will say next generation where we have to start. See, currently what we present and what is going to be present will be very different, because now the boom and the difference which we are seeing in real estate industries, we have to serve multiple customer. And like very simple, how Amazon works. This is the Amazon app. It's, you can order anything everywhere, and like the way we have to suggest our customer, okay, your project is on 15 milestone on the 16th floor. This all possible with the help of end user apps. So yep, that's how technology and the reporting layer is helping me out.
So you've highlighted Power BI as a powerful dashboard that can help us take decisions. But my next question is, with some more tools, given your experience in implementing tools like Oracle, NetSuite, or SAP for that matter, across multiple sectors, including the real estate sector, can you walk us through how these tools actually used? How are they actually used at the project level?
Guys, I say tool is just an methodology. The important thing is your concept. Like if you build a building, it can't be possible without design, architecture, etc. So whether you do on Smartsheet, you do on Excel, you do on any of the reporting tool, your concept should be very clear. What is the customer demand? What are the prerequisites for the project? So I will say in Excel also, I will say there are multiple features like Power Query. How many of us has used Power Query in Excel? If I want to know. Yep. Those okay. So sir, you know what difference it could create, and if you tell me like what any other tool can do is possible with the simple Power Query and the Power Automate. So I believe tool is a different thing, but what help us out is the thought process. Very simple thing, like if you have GST reconciliation, you extract data from the GST reconciliation. If ignoring that, if you want to do robotic process automation, build a bot which is very simple. If anyone know Power Automate is an basic Microsoft version, provide you the Power Automate. You give the command once for all, it will extract, login into the GST portal, extract all the data. It will put the data into the Power Query. It will reconcile with the ERP. So one of the basic requirement of a CA is like is a for who is in GST practice is the reconciliation of book versus portal. It can be done on real time. Now you have to focus on the volume. So see, there are two things which work for an industry is the volume and the pricing. So if you can do this automation, which is very cost effective and everything, it's I'm not going on the big tools like SAP Oracle, but it's a very basic way to do this automation. Then obviously all your concern will get resolved, and even the client will get the service on real time. So there are various tools which I work basically is on the SAP, Oracle, which in that also there are multiple tools like business planning and reporting. So BPC is one of the tool, Hyperion is one of the tool which help you out. SAP Analytic Cloud and Power BI is for the reporting layer. If you want to present in a graphical way, that's the end part. But before that, you have to do all table and fragmentation, which help us to build a roadmap for the audience.
So this is what I've understood from what you're trying to say, is that the tool does not matter. What matters is what you extract out of the tool that you're using.
Yeah.
Even if you're using a spreadsheet, but if you're able to extract that amount of data from it, it could help.
Yeah. So basically, we all are chartered and we know what end user wants. It's basically, I'm just going with a simple example of GST reconciliation. It's a day in, day out for everyone, for us, for the project, for companies in any of the sector. So I can say I can do my GST reconciliation on real-time basis. If we can offer such service to our clients, then obviously it's a big factor and it could be done very easily. with basic minimum cost, basic investment, which give you and your audience a different way. And obviously, this thinking part can be done by a chartered accountant only. So, yep, that's about the case.
So even if you refer any ERP, that is nothing but set of variables which is interlinked, so that you can get all information connected and at one place. So whether you refer SAP, whether you refer Oracle, all are basically set of tables which you can't see. You just need to give command and you get that report. So it is just at high level reports, and there is small CA practitioner who has given like the GST reconciliation tool in Excel. Like you just upload your data and 2A, and they will also give you reconciliation. So it depends on what level you want to use that. Definitely different type of data security and other factors are there. At what level of automation you want to go.
But see, in large real estate groups, it is common to operate through multiple SPVs and joint ventures across the state, each with its own set of financials, its own set of compliance timelines and regulatory requirements. Are there any specific tools or framework that you've seen work efficiently to eliminate the manual reconciliation?
Yep. So basically, for a real estate industry, there will be a separate SPV for every project. Now, if you have 60 projects or if you have 80 projects, then obviously 80 financial to be closed on quarterly basis or monthly basis for MIS, it can't be possible manually. So what again, the same aspect, like the format is same, schedule 3 format is there, you have to update your trial balance and do in reporting. Now, first basic thing is if I'll come on balance sheet, P&L and the basic schedule, there are multiple tools like business planning and consolidation, Hyperion. There are multiple tools which help you out, but important thing is the design concept. How, see, I believe as an chartered, as an finance guy, you can build that because you know the end concept, what audience will require is for a preparation of financial. Then you can go on the backside like, okay, how to connect my technology, my data set in a way like I will get my trial balance and update my financial on real time basis. Or there are certain reportings like I will say related party, I will say the segment reporting, then intercompany reconciliation. This all could be possible with the help of tool like business planning and consolidation, Hyperion. There are multiple tools, but I will say if not focus on the too high part also, with the Excel and Power Automate basic tool, you can build your customized services where financial could be presented in a very and can be prepared in a very automated way, which help us to give a different service. So currently, if I will take my example, I worked in my with my Big Four experience. Also, we most of the I will say Damag, which is in Dubai-based real estate developer, they have more than 500 entities, which is having a monthly reporting. It's not possible to do manually. It's the process setup and the tools and technology which help them to report 500 financial monthly. So yeah, that's the difference what technology is doing here.
And Pawan sir, with you, I want to know like something like a before after when you look back at AI and automation initiatives that you've implemented. Okay, whether in compliance or reporting or operational workforce, what tangible return on investment have you seen? What was there before and how?
Yeah, definitely. As I pointed out, like data accuracy, that is the biggest advantage. And if you talk about other tangible return, basically how much time it requires to compile the data. Like I can give an example wherein GST return filing, GSTR1 filing, wherein people used to take 3 days to reconcile all your financial data with return, then preparing it Excel, cross-checking before filing, after uploading again, cross-checking and then filing it. It used to, if it is voluminous data, then it takes a lot of time. Whereas if you automate this function, wherein from your accounting data itself, that GSTR1 can be prepared and it can be uploaded on the GST portal, then it will save tremendous time, and your time is required only to check the data on the portal before submitting. So it is just a reviewer job rather than entire chain of preparation and reconciliation. So definitely cost, how much cost you are saving by investing, how much time you are saving, and cost doesn't include only what you are paying to the vendor, but at the same time, how much time your staff is investing in that product, that also need to be seen. And data security and other cost, your IT cost and everything you need to factor before deciding what is the return you are getting from your investment.
So you're trying to say that the time that you save from investing into a technology like this, that should be the factor to decide whether
Yeah,
the investment is good enough or not.
it is not only like if you, long time you are going to use it. If it is not for long tenure, then you invest more time rather than getting benefit from that automation. So you need to factor that thing also while deciding any automation in your organization or wherever you are working.
Let's deep dive into the third aspect. We're dealing with 7 aspects here. The third aspects that I want to discuss is about RERA, GST, TDS, audit trails. Okay, so Pawan sir, with you. RERA compliance is not only about quarterly updates. It involves milestone tracking, financial discipline, customer commitments, timely disclosures, and from your experience in building workflows for maybe RERA compliances like project milestone delay and fund utilization, are there any tools or processes that you've implemented that helped you auto-generate the compliance data or helped you in this aspect, in the tax aspect?
So see, all are very interlinked thing, like your project execution will decide achievement of milestone, then accordingly billing, and how much time you, what is the execution, depending upon that your percentage completion and everything get decided. And so both are very interlinked things. So as far as RERA compliance, unless you track both the things together, it is very difficult for you to decide that what is the further, how much cost you are incurred and how much you are going to incur. And then reconciliation thereof with your financials, that also is very critical. So then what is the status vis-a-vis what cost you have accounted in your financials budget, that reconciliation need to be done on this thing. As far as tool is concerned, I think Akshay can throw better light on tool.
Yeah, so basically RERA milestone is an biggest factor for every organization to be considered. And can I know how many of you are connected with the real estate in any way, in practice, in something like that? So sir, you will know the importance of RERA milestone and the RERA reporting, because that's the base for my fund to get extracted from 70% to 30%. And that will lead to my project with regard to every completion aspect and the billing aspect. So for us is, let's see, is very simple. Like if I've completed one particular slab, how it will execute various factors. Like it will execute my billing. I have to bill it to the customer. I have to report to the RERA with regard to the fund extraction, etc., which help me to the rebuild of the project or the building of the next floor. Because see, at the end, cost is an important factor and funding is an important to track the project and the completion of project. So basically simple workflow where multiple tools are there. So I have to build a workflow where as and when my particular milestone has been triggered, say 15th floor, then what I have to execute? I have to inform my CRM team, okay, get the billing done. Now it's not possible to bill manually also. So with my customer database in the workflow, as and when flow has been triggered, so you execute the 16 milestone billing to every customer with the database which we have for a specific project. As and when billing executed, then the instruction should go to the CRM team, okay, get the fund get collected. Similarly, for the RERA reporting, you have to take like in the Form C, number of flat which has been sold through the customer, the amount which has been the agreement value which has been considered, amount which has been collected. So all this data source is available in my ERP. And with the workflow, again, I'm saying like workflow could be done by any tool, as very simple as Power Automate. You could have an SAP workflow, you could have any sort of tool, but at the end concept is how it trigger to my different department, etc., to achieve the needful thing. So I believe currently, if we have to do RERA reporting, so earlier with my previous experience, like we are looking for 60 project at a time. Now 60 project is 10 for more than 10,000 customers also. So if that's the case, you have to manage it with the system, and how it could be managed, like you should know what with every milestone trigger, what are the aspects you need to done on customer side, on the finance side. So basic workflow, which I will say the design concept, if this is finalized, you can build any sort of workflow, whether it's a company of 10 CR to the 10,000 CR, it will work. Yep.
For the sake of audience understanding, I would like to say that workflow means they're using technology to track a trigger which would lead to an action.
Yep.
Correct? The software would take the trigger from the software itself and lead to an action the software would perform.
Yep.
So even in GST, is that possible? Is it possible that you track ITC, reconcile it to be, and use AI in that space? Is that possible?
So when you talk about tax part, it is not just limited to your GST compliance. Think about the scenario where you just issue the quotation, and after that, entire process from receiving the bids to selection to vendor onboarding to invoice processing, payment to all the reconciliation, GST compliance, TDS deduction, vendor payment, everything is automated. So that is also possible. And like with GST has helped a lot in that thing, frankly speaking, with that e-invoicing. So I'll give you example. In this process, there are tools available wherein you float that RFQ and vendor do onboarding. With the AI, you can check credentials of the vendor, and accordingly, you can select the vendor. And once you select the vendor, you can automatically convert your RFQ into purchase requisition, then purchase order. Basis that work will get done, they submit their RA bills, you can certify online. Basis that you get the invoice also automatically get checked with the help of AI, whether it is correct, GST number, your e-invoicing applicability, everything. And basis that only it get processed. Then basis the, in fact, data entry itself will get automated. You need not to be dependent on any person to do data entry. All the information you can get from GST portal, wherein through e-invoicing, you will get that all the invoice detail. So you can validate the invoice. You can deduct TDS with the set parameters. You do accounting, person just need to review it and post it. Even you provide that access to the vendor, vendor can also track what is the status of their invoice processing. And with this automation, it is not only compliance, reporting accuracy, but at the same time, you must have heard that new things going on in the market is basically in vendor invoice discounting. So that is also possible, wherein vendor's invoice has been accepted by the organization and just pending for processing for that credit period. So that vendor can go to the market basis that, and they can go for vendor invoicing discounting itself. So this is complete process can be automated.
And AI can also be inbuilt within the system.
Yeah, AI play the role in credential checking and that part.
Okay.
AI has to be used.
So I will say on the GST portal, you will have CAPTCHA also, you will have OTP also, various things. Now, if someone is serving, say, 5,000 clients, then might be specific team is extracting data from the GST portal with the CAPTCHA login, everything. all this could be possible to automate. You can download all your register while you are sleeping or you're working for another client, because bot etc could be built and developed, which can help you to serve multiple clients with all type of report. I will say 90% of the reporting, whether it belongs to GST, the TDS, income tax, could be done automatically without manual intervention. Wow. If you have correct sort of architect and development at place. So I just want to ask the audience also, guys. I don't want to create where we are speaking and you just listen out. If you want to be interact, what I want to know, like, what are the real challenges which you are facing and you believe that could be resolved with the help of technology? I think that could be an agenda which we could discuss, and that could be helpful for everyone. See, I can see various generation, from my senior generation to my generation to my junior generation. So I think this room is full of that particular experience and problem. So if we want to discuss any such type of thing, I just want to know if, yeah, sir. So basically, you are seeing 26 AS reconciliation, which obviously isn't flooded in the month of June also. So how that can be done automatically? So like, there's two important things for 26 AS reconciliation. One is from the income tax, you will get the 26 AS data set. Second, in your ERP or any books of account, let's say tally also, you will have some sort of entry which has been passed against a particular customer, vendor, as the case may be. So now you have to reconcile what is there in the books vis-a-vis what is there is on the portal. So if you'll see, even in the tally also, I am not sure about tally, but yeah, let's say for real estate, Far Vision is one of the basic software. It allows you to upload the 26 AS file directly into the ERP. It will match out against the PAN number. While for one flat, you will have 3 PAN card also, because there are 3 joint owners. It will verify what amount you have reported in this ERP vis-a-vis what you have in the portal. So customer wise, you will have in comparison, like 100 rupees what you have reported in the books vis-a-vis 400 rupees is there on the portal. So that give you an auto report generation, which I believe will be the massive activity for the next month, like in the June month. So this could be done automatically with the system, and it's not what I'm saying. I practically done it for few of my previous companies where, there is one customer. See, for you are an end customer, but for us, it will be 50,000 customer, and you can't keep any customer unhappy. So to reconcile 50,000 customer, it can't be possible to manually. While with system is very easy to get resolved, and you will get at least an idea what are the differences and variances you have, and obviously that's how you can serve to your client, where they will say like, you can set up once for all, like what is the what is the 26 AS in the portal vis-a-vis what is there in the ERP with a customer-wise bifurcation, the pen-wise bifurcation. I believe that will resolve the problem. Yeah. Yes, Far Vision is having that option, and even after this, you can connect with me. I will show you how Far Vision will help you to resolve this particular thing. Yep. Thank you. Yes, ma'am.
The dashboard or a practical example how this
Yep.
is constructed.
Yep. So basically, before achieving a milestone, I have to do a cost for construction. So for example, I've taken cement, etc., to build a particular floor. Now my milestone has been completed. Say 5th floor I've completed. That 5th floor leads to 20% of billing for a particular project. So how this cash flow will get impacted if you don't have real-time billing software? As and when your architect certify your 5th floor has been completed, you update that particular information in the system. Post that, multiple impact will take place. Like the billing should get generated to the customer. If that billing has been done, then the collection mechanism should get started. That will lead to a fund inflow. If that fund flow is available with me, I could utilize to pay to my EPC customer, which has worked for this particular project to completion of fifth floor. If there's any delay from the collection, then obviously the vendor payment, everything will get stuck. If that particular thing will get stuck, then my sixth floor completion will get impacted, because if you have any unpaid vendor, because all projects are planned very well for the financing. If and see, in case of the Resi project, it's mostly you build the project with the help of investor and customers. So if there's any delay in the collection, it will impact your the payment cycles. If you have impact on payment cycle, it will impact your next milestone. So with the help of workflows, your CRM will be stable. You can do all auto billing to customer. Then is a regular follow up via system, no manual intervention. Okay, what is my collection outstanding? So first of all, to collect from a customer, you should know how many customer data set is there. That will be easily available with the help of dashboard. Like if fifth milestone has been triggered, then project wise, for one specific project, there are 30 customer. For this 30 customer, this is the outstanding amount which has to be get collected vis-a-vis what you have actually collected. Now, if I know on a click of button, okay, for this particular project, this customer has not been collected for more than 6 months, then I can do a pitch and follow up. Okay, guys, why this is outstanding? Then post that collection, if collection is on time, because of the real time information is available. See, if information is not available real time, the thing is someone will extract the data, someone will prepare the report. Till the time my next milestone is already ready to get triggered. So that will have a huge impact on my cash flow, which obviously impact my project life cycle. So this is how, with the help of real time information, having against your collection vis-a-vis what is the vendor outstanding which is yet to come because of the completion of this project, what is the retention you have to release. So instead of preparing the data manually, if with the help of, I will say, data lake creation with the all sort of key attributes, if you have all the information available, you can manage your finance very easily. That will change your complete project related milestone and cash flow thing. Yep. I hope answer.
Any other questions?
Yes. See, again, my say is all softwares are very good. And specifically, if you ask for real estate, then obviously the small software one will be Power Vision, Strategic ERP. Then you can go for Zoho. But for big segment, it will be Oracle and SAP. I will say this all will be useless if you don't have a proper process in place, like how your master has to be maintained. You should know, like, if a milestone get triggered, what are the activity which are important. If you have not created your system in a way, then all are useless. If you make your basic ERP also in such a way, like, so design is an important part, wherein I believe an finance guy will play an important role. Currently, all IT guys used to be an expert in it. But since you are an end user, you know what are the financial impact it will going to have, how your accounting has to be. Like if how your index will take care because of your index 115 reporting, etc. How's your 116 will get impacted, how it should get accounted. All these things I believe any ERP can done, but the architect of finance side should be a very quite understanding enough. And I believe, as in, if I will be in practice, then my focus will be on serving client with regard to how your infra could be improved, and that will be cost saving for client also and for us also. Yep.
This will be one of the new area of practice for chartered accountants, wherein they can become implementation partner for any new software, because client know their business, technology person know their technology, but chartered accountant are the person who knows the business and what outcome should come, and they can bridge this gap between client and technology partner. At the same time, since you are in finance function, you know each and everything, and clients staff, they are anyway overburdened with their regular stuff. They don't get time to spend in automation and other activities. And since you know the business of your client, you can pitch your clients that we will become your face, we know your business, so we get it implemented for you. So that can be a new area of practice for all chartered accountants.
I believe for this era, that's the most important field of practice for everyone. Like,
So what I've understood is basically it's a marriage between the finance experts that we are here
Yep.
and the IT experts that they are out there. And we have to convey on behalf of our clients what we want. According to our requirement, the IT infrastructure should be built.
yep.
So that's like taking a leadership in consulting your clients. Any question?
I will recommend the practice should not be restricted only to consulting, but you need to advise your client that we will be your partner. We will ensure from consulting till implementation. So we will do all the testing for you. We will show you the result, whether whatever results you require, whether it is in line with that implementation or not. And then only client will be happy with that your services. If you just consult and if it can't be implemented, then nobody will come again for that kind of services. So I believe it should be consulting till implementation. That's the role of new chartered accountants who are in practice and want to explore this area.
And as per my limited experience till now, I've seen a lot of big fours are investing in this field, and they are going massively crazy for this particular field, because I could see the percentage of their billing part which they are serving to the client with regard to the automation, GST related automation, any sort of automation. With the finance segment, I'm saying is CRM, sales, marketing is very different loop, but they are focusing on this direction because now, see, decade or 2 decades before, even we never think about the government to get so automated. We never thought GST will be implemented in such a way. We never thought our AIS, XA. Now government know more than us. Okay, like, okay, this much transaction I've done, even I'm not aware of it. So that's the next era which everyone has to be focused if we want to achieve the next level of success. Yes.
Since you're working in an industry, tell us more about how Big Fours are approaching towards this.
See, Big Fours are approaching, like crazy for this particular, if you'll say for the automation related thing, and if you'll go for a local particular consultant and the implementation partner, they will approach you like, okay, we'll try to match the cost and everything, but they want to increase their base, because at the end they also know it's a next level of practice, is a next level thing which will be continue in the AMC model. You can't get it out to your client, because if you have implemented one time, it will be in lifetime practice for them. And yep, that's a best field they are doing.
Sure.
Yeah. Yes. Yes.
मतलब जो भी ये स्मॉल पर्सन है वही, पर बिग फोर को जो क्रीम फीस मिलता है ना, लेट्स से 1 CR फीस बिग फोर को मिला तो बिग फोर इम्प्लीमेंट करेगी। अभी अगर छोटा चार्टर्ड अकाउंटेंट को भी 1 CR फी मिलेगा ना, तो वो भी वही काम करेगा। फिर छोटा चार्टर्ड अकाउंट को 1 CR फीस देने के लिए कोई राजी नहीं है।
100% agreed, and that's a good point. And before that, see, first of all, they've invested in such a way and way ahead to the time they focus on this area. Now for us, what could be a solution? See, a lot of my friends which are in the techno functional area, they are profession chartered, they're small firm, they've started their own. Now they can't compare with the big four. That's for true, because I will say for a big organization, they will not trust a small CA firm. But what could be an alternative? So most of the big four, they used to outsource their activity. Like, okay, if you are an expert in an GST era, so with your small setup, you could connect with and you can partner with any of the big four where they will help you out. So it's a subcontracting. Once you will start with subcontracting, now is the name related thing which will take place. If someone know like, yeah, this particular person has implemented, is connected with you will get an independent practice where most of the mediocre client will start working with you. Okay, let's do this particular automation with us. That's how most of the CA firms are working as of now, and that could be a best approach. See, you can't you have to start somewhere. You can't reach directly to a top segment. And then in our practice also, how we work with the filing of return. Then we start, okay, we'll do for your, this compliances also, your financial also. So I believe that's the best way where everyone is focusing as of now. And even we have reached to the level to where we are working with most of the mid-size CA firm with regard to the automation and everything, because at the end, Big Four is just a name per se, but obviously at the end, human beings are working at those places, and the mindset, we also have the similar mindset. They also have the similar mindset. So yes, this is how the things work. Like, you have to start, and first of all, you have to focus on that direction.
I think Akshay has also subtly said it, that Big Fours have invested a lot in this.
Yep.
Said in another way, they have expensed out a lot of their efforts into learning, adapting, and positioning themselves as an.
Yep, and even doing continuously.
So from the industry side, he's saying he's open to appoint medium, small size practicing firms also. But are they positioned? Are they invested into automation?
Yep, sir. Yes, sir. Correct. Yeah.
How technically will it impact for completing the project in time? Because real estate basically has a main focus on the complete. Once you deliver in time, then only you get
Correct.
a success. So where is the role of AI or automation in
Yes.
completing the project on time? That is, I think, the main focus.
Sir, so basically what you are saying, for real estate, basic task is to build a building. So you have to build it on time and deliver to customer. That's your main agenda. Other things are side by side. So there are two important departments. One is the EPC, is the engineering, procurement, and construction, who build the building. They are the crucial and the core for any real estate thing. The era which they are working a decade before and now, it's completely different, and with the help of technology. Very simple example, like how much quantity in material will be required for the next 3 months. Earlier they used to do mostly in Excel. Now team know, like the EPC had know, okay, this much of material if I will require, then obviously this is my calculation, this is the fund flow I will require. Now if he is know what's the fund flow required for 3 months, then I'm sure now I have to arrange 10 CR for next 3 months, then I will pitch the bank accordingly. So with the help of technology, like, it's just billing order quantity, BOQ related thing, is just one example. They know, like, if there's any change in design, then with this particular change in design, what is the impact on my total construction cost, how I have to plan my resources, and which resource is working, what is the budgeted timelines. If you want to complete anything on time, you should know what are the budgeted activities, and that has to be somewhere maintained in the system, because if we discuss something for a week, we forgot in next week what we have discussed in last week. So okay, now if senior management know, like, for completion of this particular floor, these are the 10 activities, 6 are on time, 4 are delayed, and they know because of the system what is budget versus actual in the system. Now 4 are delayed, what could be an action plan? So if that can be taken 2 months before, vis-a-vis if you do manually, you will know 2 months afterward. That's how you will help to make your project live on time. And even I will say the fund flow will get managed accordingly, because they're all projection which you will do, and that projection will only help you, because most of the time if you'll see project got delayed because of funding, which end customer will never come to know. But that's the crucial reason, because a builder, I will say, started 6 project, 10 project at a time. Where he got stuck is because of the funding. If funding got delayed, the completion got delayed. If completion got delayed, then the end delivery got impacted. So, sir, answer to your question is very simple. If you'll see the EPC department 10 years before and now, they are well versed with their requirements, and they are on the top of the thing. Like, Akshay, I need this. I will have this particular requirement in the next 3 months. So I believe AI helped them a lot, and even they analyze their vendor with the help of AI. If you'll see Ariba, etc., they come to know, ये vendor हर बार ऐसे करता है, he will delay the delivery. So I will have category ABC analysis for the vendor if I have to deliver something on time. So and this quality will always get impacted. At the end, quality matters. So if I have to do vendor A versus vendor B, I could take decision instantly because of the information which is available in system. So yep, that's the way it's got. Yes.
So my question is to Akshay. So with SAP HANA in market, so my question is basically in relation to automation on consolidated financial statements. So while with SAP HANA is in market, so which are the best user-friendly consolidation tools? So we can get the error-free financial statements with an automation mode.
So first of all, Mr. Rahul and I worked together in one of the previous organization, and we both worked on the implementation of business planning and reporting. That's a BPC tool of SAP. So like your question is, currently we have S4 HANA in the market. With S4 HANA, which reporting tool will be the best one to have an end-to-end integration? So now, sir, important thing is you have SAP S4 HANA in your as an EPC environment, is your ERP environment. So there are multiple tools, but since you have S4 HANA in place, I will suggest you should go with group reporting only, which is a tool of SAP. Reason being, you will have end-to-end integration from S4 HANA as a day-to-day reporting. Then for group reporting is an reporting layer with regard to a financial and MIS. Then at the end, you will have dashboard layer, which is the SAP Analytic Cloud. So if you have invested heavily in S4 HANA, you should go with the only group reporting SAP Analytic Cloud.
So are the two options like finalizer and emerge can be the best option?
See again, if you say I have any other ERP other than SAP, I will suggest Finalizer, and even I have evaluated Finalizer a lot. Tool is really good. Emerge is again a Pune-based company, which tool is very good. The thing is, it will not support the requirement. Your management have a requirement. Okay, Rahul, if you have delta of 10 rupee from other expenses, then go at the document level. Then document level detail is again in the SAP. So Finalizer, etc. will not get connected so easily how group reporting and other tool will help.
Thank you. Thank you.
Thanks. No, sir. PowerVision don't have a functionality of consolidation as of now, while it can do standalone financial. So if you have PowerVision as a system in place, then I will suggest there are various tools like eMerge. I will say various Big Four has launched out their tools with a very price effective manner. Is EY will have DG Fast. I will say Finalizer is one of the tool which is Rahul is saying is one of the finest tool I find which is a cost effective and help you to achieve the level of reporting which any of the big tool is doing, big ERP is doing. But Finalizer, yeah, PowerVision don't have as of now.
Yes. Every year we perform the tax audit.
Yes.
And there is my own experience is that in preparing tax audit, there are certain details which are required to be filled up in 3CD form.
Clause 34, 44.
Clause 34, 35, and then in loan details and similar details is being asked to when the income tax scrutiny start.
Yes.
So whether this AI is going to help in this manner directly to the income tax 3CD?
Sir, I will say forget AI. Basic automation give you 80% of the information, and Pawan and me has, and so I moved to a next organization where Pawan has really worked on that part where 80% of your tax, or we are in the process of implementation because see, for a big organization, I will say very simple example, Reliance. Reliance will have, in Reliance Retail, there are more than 100 companies. So how tax audit could be possible to be filed, and with having an international transaction also. So like very simple example, clause 34 and 44. What does it say is basically your TDS data and GST data. What is you have in the system vis-a-vis what are the total expenses vis-a-vis where you have deducted GST or not. This is quite, and currently the ERP is providing you the information. So best way for a practicing chartered accountant, if the client size is in such a way where client don't have the setup and he don't have that particular formation, with the help of basic tools like I will say Power Automate, you can get the portal data, you can get the ERP data both at a place, and the way you want to prepare the clause 34 and 44 is 95% possible, and your tax audits are 85% is possible to get automated, which I think so Pawan is working on that project also.
Thank
We would
you.
like
Thank you.
Pawan sir
Thank
to
you.
highlight on this.
So
Thanks.
basically, I'll say don't overthink about automation. Just rely on your basic things. See what you can do. Same data source are there, same things are there. Someone is extracting and providing you. So through automation, you can get it done. If whatever is the regular process, everything can be automated. Wherever you need to apply some mind and analyze something to report, only such are the areas which cannot be automated, and that is where you may need to take help of AI or your review. Otherwise, as far as tax audit and other things are concerned, everything is flowing out from your financials only.
Yeah.
So all data are available in financials. Only thing is like how the data is maintained. Some data is not maintained at all, and some data is maintained at different places. What you need to do is you need to plug those data in such a fashion that you will get the report what is required in your format. So it is just a reporting which can be easily automated.
Okay. Thank you.
Thank you.
Any other questions? One more aspect just I would like to cover. So I've written it down. What are the skill sets that you think we all who are sitting here should adapt, should learn to be prepared for the coming future?
See, first of all, we
To give us specific tools so that all of us can prepare on something like that.
So important thing is we already have all the skill set. That's why we are chartered. But now, what is required to adapt with the current market practice is basically, I myself feel like when I was doing in a techno-functional field, most of my friends and the seniors also used to say, Akshay, our field is finance. So get focused on finance. I used to say finance is a very vast area. To make it more effective, you have to adapt technology. So as in chartered and we and such experience forum with everyone, I believe we are the best mindset who can focus on technology to bring an large scale I will say large scale benefit for everyone, where with the help of technology, with the help of the mindset we have, see what CA makers is basically the way to think. We can think and we can do things beyond imagination manually. Correct. So having lot of compliances doing manually is only a chartered can do. So with the help of technology, we could increase our market set. So obviously, I will say you focus on Power Automate, you focus on Power Queries, you focus on very basic tools where things your day-to-day activity, try to make your day-to-day activity automate. Like very simple thing is of bank reconciliation. It's download the bank statement from various bank portal, then your ERP data set. Why you can't make an array of both of them automatically, like your Power Automate what? So in my with my practical experience, I have built a bot where all my bank reconciliation is happen over the night, and in the morning we have the report what are the open items. So I could force my CRM team, my EPC team, okay, these things are pending. And this is done with the help of Power Automate, where it extract the bank statement, it log in automatically over the night, it extract the bank statement, it take my ERP data, and there should be a common field. So now common field, that's why how we design our way, like making an entry, like if you are making a payment, it's an host to host payment. So you get UTR number in your ERP back. So for a reconciliation, I have an UTR number as a common field in the bank statement in my ERP. It do an auto reconciliation. I will get an open line item. Okay, like these are the 10 open item I used to work. So that's how while working on an account function, it helped me a lot.
So Power Automate is helping you to do bank reconciliation automatically overnight.
Yep.
Can you give us some more examples as to how practical examples that you've been seeing?
For bank reconciliation only?
For any function. For any function.
For other functions. Okay. So I will say the payment related thing. So before the payment, let's focus on the GST related thought. So as in when you get an invoice. So now most of your vendor will be the e-invoice vendor. So on daily basis, we used to get data from the portal where, okay, how many invoices has been raised, because as an invoice gets generated, you will get the detail. Now you have all the fields, what is the invoice number, GST number, etc., etc. That data we used to park in our system to do an invoice processing, because if you'll do manually, instead of a slash, you will do a hyphen, etc., etc. So all sort of, and that will have a major impact on the reconciliation, because now invoice numbers are not matching. So your invoice processing to the payment could be done automatically if you focus how e-invoice data could get extracted from the portal, and how while approving how that data can be considered in your ERP. So your invoice processing should be a click away, and you will get your invoice matching with your GST portal data. And obviously, with the help of various API, you will come to know which particular GST number has not make the GST invoice submission, which not make the payment also. With, and this API is easily available for all of us. So if you know, like for your client, okay, you will do a GST reconciliation, but you know, like while booking the invoice, the last month return has not been filed by the another party. You can make the payment net of GST only. So the biggest component is the invoice processing to the payment could be done automatically and with the help of minimum manual intervention. And it is possible with basic workflows and basic Power Automate tool, Power Query, where Power Query help you to restore a lot of data. So I believe that's a main concern for a finance. If I'm just talking on a finance side, so that's the main thing which could be done with the help of low code, no code tools.
So I can add here for practitioner per se, like you are doing a lot of reconciliation where you are getting data from your clients every month in one specified format. Then your staff is doing formatting, then matching it, reconciling it, and giving 2 days, 3 days to make it appropriate so that you can file your returns and everything. With the help of Power Query, one time you set the function, same data set, you just copy paste, and within few seconds, you will get that report which you are getting after 2 or 3 days, because the data set is same. So that is the first step. I can say it can be automated in all CA offices per se. So it will save a lot of time. So similar way, wherever you are getting same data set and same process is there every month, you can use Power Query, which is the simplest solution. And then definitely the advanced solution will be Power BI, but that is for industry more, not for small time CA practitioner.
Audience, do you have any questions in this aspect? Yeah, yes. Take up.
Yes. Yes.
And I realized that my staff was doing those entries manually in Tally. And every month 500 purchase line item, every month 500 sales line item.
Correct.
So Power Query is a simple tool available in any Excel file.
Yes.
Which allows you to tell Excel that to modify the data. So you tell Excel that you use this data, do these steps so that you get your data in form which you want. So what we did, the data which comes from the client, we modified that in Power Query. And then there is a linkage possible from Excel to Tally.
Yep.
So we, link both the data, and the 500 items which manually used to be done in say 2 days or 1.5 days, it can be done in 3 minutes.
Perfect, perfect, sir. That's the best example, and I really clap for you. So this is the way where concept got changed. No tool, no technology. You could directly link your Tally with the Power Query, because it provides you the, so might be somewhere this we can do a live session also for the same, where in Excel, if you go in data, this provide you an option of Power Query. With Power Query, it provide you an way where you could, it give you an option like connect with Tally, connect with I will say the Azure Data Lake, etc., etc. So now SA016, I think so, sir, that's an terminology they used to have. So you can connect your Tally data set directly. Now no need for client to share the data. You have linked your Power Query with the client data set. The as and when data will get updated, it will update your Power Query. Then Power Query got updated, you have the set of a step where okay, remove this column, do this particular filtration, etc., etc. You will get your report ready, and you can suggest client, okay, this is going good or bad for you. If we provide such type of services, that's how we create a difference, because you, sir, you have that mindset to think what could be good and bad for a client, which client can't, but you need the data. So that data is the new oil for everyone. So you link the data in such a way where you are more pro with the client also, like no need to share the data. I know what is good and what is bad, and you will suggest do in such a way where client feel now this is the ways CA is actually for which we are meant for, is helping me to run the business instead of just doing an audit which everyone feel it's a postmortem job and it's just doing for compliances. So yep, really I appreciate you. Yeah, that's the best thing.
And if anyone wants to add up to such kind of automations that they've implemented to their office,
Or
would
just
love to
one
hear
more simple automation where, say, every month you need to send some kind of same mail to your clients. So Power Automate is another tool, which is, I think, is also a free tool, where you can just, tell the system that system should perform this steps. The same way what you can tell to your junior. For example, if I have 10 shares and if I want to go to Money Control or say NSE website and find out the latest price of those 10 shares, I can tell my junior that, okay, ek ke baad ek, search the price and put it in the Excel file. The same instruction you can give in Power Automate, where the system will take share of each share. It will go to Money Control. It will put that name. It will click. It will take the price from that Money Control site. It will put it in the Excel. So this is what Power Automate do.
So basically, you can schedule the same, and even you can do the trading also with the help of Power Automate, where you will give the certain criteria. If PV ratio is less than this, more than this, what is the profit of the, because it can go to the website also. It will identify the trend of the last 5-year profit. If it met your all the criteria, then you are going to manually buy and sell. Na? That bot can do on behalf of you, where obviously that all thing will be done in Power Automate. And best thing is it can be auto schedule. So instead of someone has to trigger it, it will trigger automatically once the conditions got justified. So, and obviously it's free of cost. It is available for instead of premium, the local version is available in that way. And it's a low code, no code tool where you don't have to be very expert in the technical side. We have various platforms, like with the help of YouTube, I have learned most of the things with regard to Power Automate. So yep, that's how it's helped.
But we are not using Microsoft Excel itself at its full utility. It also has a lot of functions, which we are spending a lot of hours to do these things. And I believe that that is the area, Excel, Power BI, Power Query, that is the area where we need to also put focus along with our regular update on tax laws and other things, so that we can expand our business and we can put focus on whatever that analytical work rather than data validation and accuracy checking and compliance work.
So one important thing, sir, how you are going to deal with IMS, invoice management system. Because I think so that's the next question client will ask you. You will not going to approve all the invoices on the portal. The credit note, debit note will have an issue. So what's your plan to, because see, I'm not in practice, but I'm thinking on that side, like how I will do an automation for IMS, because it's the next lucrative field where client will ask you. So that could be done with the help of various workflow and Power Automate, where you will save client to not to invest in a heavy tool costing you in lakhs, but with because see, at the end CA is the one who will apply the mindset for what IMS is required. So if you can automate it, it will be the best way to have all goals clear.
And that's beautiful. Even though you're not in practice, you're still thinking of how to automate a practice.
Yeah.
So that's technically what I call is a technological blind spot. We all sitting here are experts in our subject field, but sometimes don't know that we don't know certain things. So we're not working on it. So that's what I call a technological blind spot, because if in case we figure out how technology can help us automate a lot of things, it would ease up our job. And it comes with a sort of mindset where you are trying to figure out, because like I said, you don't know that something like this exists. So how will it come up? How will it show up to you? So when you're trying to figure out, working with it, constantly thinking and learning about those tools.
And also with see, you all are more experienced than me. What I realize in the current scenario now, the more senior the chartered, he's more focused on this technology side, because we used to think like the new generation will focus on it. Instead of that, as per my experience, I realized the CA with 20 years of experience is focusing more and more on technology. Like they are going crazy. Like I have to focus how this thing could get automated. So yeah, so technology is like more senior is going more focused on this particular technology segment. Even you can see Pawan also is more than 20 years of experience, but while working with him, I never used to feel like if I'm working with any senior, is more redundant to go toward the technology. I find him like Akshay, let's do this particular automation. It will help us, and that zeal is required for us to move ahead. Yep.
It's more of the approach that we take than the age of a person. Quick rapid fire round to wrap it up.
Yeah.
Are you guys ready? Yeah. So I'll ask quick questions, one word answers. One AI tool that you can't work without.
For me, ChatGPT and Copilot, yes.
As far as industry is concerned, they are more relying on Copilot because it is licensed version of Microsoft, so that it gel very well with all your Microsoft products. And definitely the data security, which is the most critical aspect of AI. So it will serve all the purpose.
Copilot wins the race here. One task you would never trust an AI with.
I'll go for when doing any case study, case summary, litigation thing. I will never rely on case laws and anything which comes from AI.
For me, it's the personal relation with different stakeholder. I will try to keep it with myself only, not with the AI. Yeah.
You will not let AI replace
Yeah,
relations.
so personal relation is built like once we have a face-to-face discussion.
Then it would be artificial relations.
Yeah.
Biggest resistance that you faced in automation rollouts?
Yeah, so like first someone feel like this will take over my work. So why to automate this thing? So that's one of the biggest, but that's a very wrong mindset, I will say.
And it will also require extra efforts beyond your regular work. So nobody want to put extra work. Like I am already sitting working till 7 o'clock, 8 o'clock, and if I'll put more time in these things, then I need to sit till late night. So that also
and I'll not get overtimes. People don't want to put that extra effort to learn AI. That is also true. One myth about AI that you want to bust.
So basically, thought process is key. It will completely replace finance function or whatever function it is, but this is not the fact. It is just an addition. It will just change the role. Right now, whoever is focusing on data entry and data related job, the focus will shift as a reviewer. Like where is the error? Then it will be more accurate thing comes. So it is just a helper, like rather than you doing data entry, now you are focusing, gaining more knowledge, what is happening, and you can do value addition.
So Pawan, it's an rapid fire, one word. So very simple, one word. It can't replace human intelligence. Simple.
Great. Finish this sentence. By 2030, every chartered accountant must know how to.
I'll say how to put query in AI tool. Because
prompting.
AI...
Prompting. It's called prompting, right?
Yeah, it's the prompt.
Perfect.
So now you prompt your problem, the tool will tell you the answer. So yep, that's one of the good things.
Great. So that's all for today.
Thanks everyone for having the discussion. Yeah, thanks a lot.
You've been a wonderful audience as well.